averages off, right? And let's just show the chart for just the fibs, right? Let's say you took a call right there, right? Straight off the 50% Fibonacci retracement level. No other confluences, just the fibs, right? Let me show you how that would work. You take the call, you start to see how the market's pushing up in your favor. Then you see it pull back down. The 38% level is holding, coming back down to retest the 50, right? Now you're starting to see a lot of rejection, starting to see a push back down to the 50. They like the 50, buyers came back in. This is your conviction. You have to always maintain your conviction. The 50% is holding. We held the 38%, and now we broke above the 0%. And now this is your level of TP, right? When you're using Fibonacci levels, your TP level is always going to be, from your entry level all the way to outside of the fibs, right? Above the 0%, that's where you're going to want to look to take profit, right? But normally with us, we like to add the moving averages into course, right?
Yeah.
So our entry would have been somewhere around here, right? Around this 528 level, we would have saw support above the 50%. We would have saw the cross, and we would have exited around 530, right? So that's an example of how to use the Fibonacci's. And then you see how I just brought the moving averages into it as well for confirmation. And that's how you use like that confluence between the moving averages and the Fibonacci's, right? And that's how you use Fibonacci's on an uptrend, right? If you want to catch the next dip to buy for the next move up, that's how you would look at it, right? Recent low to the recent high. Watch for support, get in on the support, and then you take profit when the price reaches above the level. Okay, so far so good. Any questions on Fibonacci retracements on uptrend? MA cross 5 above the 20. Yeah, so when it comes to confluences, Chad, you always want to look for moving averages to cross, right? In the downtrend, you see right here how the 5 EMA crossed below the 20, and there was a lot of strength below that because once the 5 EMA crossed below the 20, we started to see a lot of rejection from the 5 EMA. That's a bearish stance. That's the price leaning bearish. The most important confluence I like to always basically certify is the 20 breaking the 50, right? Basically this green yellow breaking this green line breaking the yellow line. Whenever the green line breaks below the yellow line, it shows true short-term downtrend, right? When the green breaks below the yellow, right? Now when the green breaks above the yellow, it shows true short-term uptrend, right? I always tell people that when the 20 EMA breaks above the 50, you're in for a short-term bullish uptrend. When the 20 breaks below the 50, you're in for a short-term bearish downtrend, right? That's how that works. When the 20 now breaks above the 50 and the 200 EMA, now you're looking for more of a long-term uptrend, right? More push, more strength because now price is trading above a long-term moving average. Since it's happening on a shorter time frame, it wouldn't be as strong. So always consider the fact that always consider the fact of the time frame that you're in. Right now we're in the 5-minute time frame, so if the 20 did cross above the 200, it could serve for a good move for the short term, a day trading session, but not for the long term, right? So just wanted to know how to set up the moving averages. Gotcha, Rock. So let's move on to real quick. Let me just show you guys the moving averages before we get onto the Fibonacci for downtrend. I want to show you guys the settings for the moving averages so we can keep that confluence in tune. Good, Rock. Nice. Okay, cool. So really fast. Moving average ribbon is the indicator that I have right here. This indicator, man, I'm not even gonna lie to you guys, never knew about it. Royalty Trades literally put me on. He was like, yo, if you're like not trying to use up all of your space, because you know how if you guys don't have TradingView Plus, they're not gonna allow you to basically, they're not gonna allow you to add a certain amount of indicators. So just a matter of that fact, it makes it hard for you to put the indicators that you need. If you use the MA ribbon, it allows you to put up to 5 indicators. Wait, 1, 2, 3, 4. Yeah, 5 indicators. So that alone, super cool, minimizing space. So if you put the moving average ribbon on, right, it's gonna start off. Let's take it off real quick. You put the moving average ribbon on, it's gonna look a little bit like this. Once you see this, you're gonna be like, what the fuck is this? No worries. That's when you come to the settings right here, right next to the eyeball. You click settings, right? It is saying to upgrade. I don't know why. That means you probably have too many indicators right now. You guys see, I only use 3 indicators max. I use volume, MA ribbon, and RSI divergence indicator. You don't really need the volume indicator if you're using a VWAP. I believe a VWAP is a good enough volume indicator to take into account, as well as just um, keeping an eye on the daily volume for the day. It also helps out a lot because you can relate it to the previous days and see if volume is up or down for the day. All right, so back to the MA ribbons, guys. When you get this weird mixture of lines and colors, you come here to the settings next to the eye, and you go to inputs, right? You move this to EMA. First one, move this to EMA. The third one, you keep it SMA. Fourth one, you make it EMA. The reason I have the 50 as the SMA, well, you'll see. I'll change this now. So these you change, right? You keep the 20. You keep the 20. Move it down. You put the 5 here, and you put the 20 here. Take that 100 out. 100 EMAs, it's good, but you don't want to have too many EMAs on your chart. You're gonna get confused. The more experience you have down the road, the more use you'll find for these support and resistance levels. But for now, we'll just take into account these levels, okay? So the 5, 20, 50, and 200. This is what I look at, all right? So the 50, we always keep it at SMA because it's for me, it's easier to see the crosses with the smoothing average and and the EMA to better find those levels of entry, right? So once that cross happens with the EMA and the SMA, it's kind of more exact and precise than how it would be with two EMAs or two SMAs, right? It's kind of it's a little thing that I've been trying out and I've been liking it. I've been doing it for a while now. So now when it comes to the colors, the 5, aqua blue, the 20, nice and green, the 50, yellow to slow down, and we're gonna keep the 200 red. That red line, always remember, red lines are important lines. That's why the 50% Fibonacci is important. That's why it's red. The 61.8, that's why it's red. I'm using TradingView. Just so everybody knows, right now we're doing trading. We're doing TradingView charting right now, okay? So if anybody wants to know how I'm doing this, go on tradingview.com, make a free account. You don't have to upgrade. We're not using that many indicators. We're using just one indicator right now, and everything else is just tools. So no worries. Okay. Let me know you guys. Are we all on the same page right now? You guys all good? I have a ribbon with 9 inputs. Chad. Okay, good. All right. So boom. To continue this, once we get the colors right, now we go to style. Now we got to make it look aesthetically pleasing, right? So the magical step line. You go to the MA1, right? The aqua blue line. We know that's the 5 EMA. We change the style of the line from line to step line. Boom. And now we got our magical step line, right? That right there, we leave it alone. Now we go to our next one. This, you don't change the style, but you do change the thickness. Make it a little thicker. The second thickness is the one that I recommend, right? Oh, sorry. Let's get back in there. And you do the same for the yellow, and you do the same for the red, right? Boom. So that is how you set up the trying to make it EMAs. So boom, right? Now you got that EMA look. Your chart's looking like mine. Some of you might be wondering, how do you make your chart black? You go to app settings, right? General, system, light, dark, and there you go. Sorry, I probably made people blind for a little bit. Sorry about that. All right, but boom. Now we got the EMA setup, right? Everybody on the same page here? Any questions about the EMA setup? Raj said, I love the step line. Yeah, the step line is the best, man. Trust me. It is one of the best momentum indicators that I have bumped into, honestly, in a while. I know a lot of people use different momentum indicators, but for me, this moving average does it. All right, just making sure everybody got the EMA information down packed. I couldn't find how to remove the indicators, but I'll find out later. So your indicators are gonna show up here, right? It's gonna be the little trash can right next to the source code, which is next to the settings. Remove next to the 3 dotted lines, right? That's how you remove the indicators you have. Okay. So back to the Fibonacci retracement. So we're gonna be doing the Fibonacci retracement, and we're gonna keep in mind that the EMAs are gonna be here as well for a confluence. Since we're working on the Fibonacci retracement for a confluence, we're also going to be focusing on how the EMAs react within these confluences, right? You can also right click to remove everything. Yes, you can, Mirage. So let's see here. Right. Work on the dip. This is a good dip here. All right, so let's bring this chart back here. Let's work on.
That's the PAL dip, right?
Let's work on Wednesday. Wednesday the Powell dip?
Yeah, I believe so. It looks like the
Yeah.
PAL
Okay.
dip.
So Wednesday is definitely giving that vibe. I'm not gonna lie. Really need Fibonacci's on the because I know when he started talking, things started going in our favor because we were waiting for this dip. Remember the orbs were here. I remember the orbs were here, and then we just had this giant dip all day. I'm doing the
Crazy.
1 month free trial. Nice. All right. So boom, Fibonacci's on a downtrend. Pretty simple. Basically, the complete opposite of. Sorry, basically, Fibonacci's on downtrend, you use it the complete opposite way that you would do it with the uptrend. Instead of the recent low, I mean, instead of the recent low to the recent high, you're gonna mark the recent high to the recent low, right? So in this circumstance, a lot of people would think, okay, you're marking this level all the way down to this level. But the most precise thing to do is to take away the consolidation, right? We know that our orb was here, right? This is gonna be very sloppy, but let's just keep in mind that this was our orb, right? We know this was all consolidative, right? So we're not really gonna take into account this entire dip right here. What the dip that we are going to take into account is this dip, right? So just for anybody trying to like identify what kind of dips you want to put the Fibonacci's on, the best way to do that is to not include the consolidative dips, right? This dip right here was just a retracement of this uptrend right here, right? This right here was the Fibonacci within itself. You see? So if you guys see how this came up here, it dumped all the way past the 61.8 and below the 0%, right? That's where you start your new Fibonacci now for a downtrend because the price has chosen a direction, meaning that the market is now going somewhere, right? So let's pretend that hold on. Let me delete these things. Let's pretend that we saw this dip right here, you guys, right? Boom. We saw the dip and this was the first green candle that popped up. A lot of people were probably asking, "Damn, Trana, when do we get in again? When's the next level of entry?" This would be the best way that I would try to find out the next level to enter, right? I'll put the Fibonacci on the recent high, put it down to the recent low, which was basically the level of support that we got into, right? Where the price found some support, right? And from there, we'll figure out where price rejects, right? So just so everybody knows, right? And if you're writing this down, mark this as well. The 38.2 Fibonacci level is a strong trend indicator, meaning that if price supports off of that level from a reversal, from an uptrend, and continues moving up from that level, that means that the uptrend is holding strong. And that means that the bullish move is true, right? Now, if the
So
Fibonacci comes down to the fifth, go ahead,
you're saying
Fish. You're good.
you're saying that 38.2 will act as like it keep an eye on it because it could start acting as a support resistance flip. Is that right?
Exactly. That's a level that you would know. Like for example, on a downtrend, let's say price is coming up. That's the first level you're gonna look at for rejection for continuation in the downtrend. You know what I mean, Fish?
Yes, sir. Sorry, I'm trying to mute myself while I'm not
Exactly. No, no
talking.
worries. You're good.
Yeah,
And
no, that
vice
makes
versa. In
sense.
the uptrend, you would look at that level for support for continuation in the uptrend.
Cool. Awesome. Thank you, bro.
Exactly. No worries, man. So basically, right? Let's say now, past the 38.2, what's the 50% level? The 50% level is basically half of whatever move was just given. If the Fibonacci, right, if the price retracts itself to the 50% level, that means that it either sold off half of the move that it just made or bulls bought back half of the move that the bears just sold, right? So, meaning if you put the Fibonacci in an uptrend and it comes down to the 50%, that means that bears managed to sell off 50% of of the uptrend that the bulls managed to hold, right? And that's when if the trend is still holding, bulls will normally come in and step in around the 50% level, right? And I don't mean just any bull. I mean, normal bulls. I'm talking about bulls with millionaire bulls, the bulls that be dropping 300K on calls, those kind of bulls, right? Now this brings me to the 61.8% Fibonacci level. The 61.8 Fibonacci level, I like to call it the institutional buying zone, the golden ratio zone, right? A lot of us like to call it the golden pocket zone. This level is so, why is that? Why is that such an important level to buy back? Because normally, when psychologically, when 50% of the price has sold off, it looks really good to a lot of buyers, especially if the stock is in an uptrend historically, right? A lot of people are going to see it as a moment to probably get in. Obviously, if you're adding other confluences like MAs and other support levels, buyers are going to step into this level and see the strength within this level, and they're going to want to buy it back from that level. Not all the time, but sometimes. If you do see support or rejection from that level, take into account that that's exactly what's happening. That means there was interest in that level, either from buyers or sellers. Now, like I said, that brings me to the 61.8% Fibonacci. So if it breaks, so if it's at the 61.8%, meaning it can break out higher. For example, at this level, if we're looking at it, the 61.8 in a downtrend, right? If it breaks above the 61.8, that means that we are looking at a full reversal, right? In a downtrend, you never really want the 61.8 level to hit, right? Because it doesn't serve as a golden ratio the same way it would in the uptrend, right? So when we're doing Fibonacci's in the uptrend, a lot of us have seen how the 61.8 level is normally that level of support that institutional buyers step in and really bring the price back up for a new uptrend, right? That doesn't work the same all the time in a downtrend. In a downtrend, normally that level, that institutional buying zone that gets sold off immediately is normally the 50%, right? When they let it get to the 61.8%, almost all the time, not every time, but almost all the time, price does find itself back up. And whether it's bulls or bears, they always find a way to kind of get the upper hand around that zone, right? Especially in a downtrend, right? So in an uptrend, golden pocket is valid. In a downtrend, golden pocket differentiates a little bit. It's the 50%. So that makes a lot of sense. Great. Boom. Okay. Wow. That's really interesting. Nice. Okay. Boom. Back to the 61.8. So the 61.8%, like I said, it's the golden pocket zone, right? In an uptrend, that's the zone where institutional buyers will step in and they'll most likely rebuy whatever was sold off, right? We like to call it market manipulation, right? But if you guys realize that market manipulation, it has a lot to do with Fibonacci as well, because the real manipulation happens around the level that people least expect it to get bought back. Do you know what I mean? That's psychological. That's why the Fibonacci is a very, you know what I mean? It's a very important and a strong confluence that I like to use, right? So 61.8%, what day was it, Fish? Do you remember that one day where they picked it up to 61.8, man, and the price went all the way up to like, it went up like 10 points, 20 points?
I
It
don't
was
remember
crazy.
which day, but I remember watching it.
It's happened. And the thing about it is that that's normally the level that market manipulation likes to step in. All right, we got all the retail out, we got all the losers out. Let's rebuy it back in and let's get it back up to where it needs to go. You know what I mean? So that's why I tell people a lot. In an uptrend, always keep an eye on the 61.8. In a downtrend, keep an eye on the 50%. Now, let's continue with our downtrend example, right? A full V recovery breaks 61.8% from downtrend. Yes, exactly. So, Chad, as you see right here, let's say SPY right now broke above 527 and it started to make its way above 528. At that level, I would start to tell people, okay, watch for a full V recovery. Watch for the possibility that SPY can actually get itself back up to 531, right? That's when the chances of bulls getting the upper hand again and trying to V the price back up, that's when that comes into play more, right? So now going back to the circumstance of how fibs work in a downtrend, let's see here where we would short, right? Just using the fibs, right? And a little bit of EMAs here. You guys know how the 5 EMAs my momentum indicator. Once that breaks, momentum shift. Um once that breaks with momentum shift, once that breaks with a momentum shift, you'll see support on the 5 EMA, and then you can consider the trend changing. You know what I mean? But let's figure it out right here, real quick. Let's see how it goes. So, boom, we're looking at the price moving up, 20 EMA curling down. All right. Look at that, pushing itself right back up a little bit. Look at that. Okay. Let's keep an eye on what's happening right here. What do you guys see? What do we see right here, you guys? Can anybody tell me in the comment section? I want to see what's going on. What do you guys see? What are we looking at? What did the price do? 31.8 rejection. Yes, 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 yes. And what did the 31 point what did the 38% level mean? What does it mean, guys? What did I say that meant? What kind of weight does that level hold? What happens if we bounce from that level? What does it mean for the trend? Continuing. Good. Yup. Yup. Exactly. No problem. Yeah, exactly. So what I wanted to point out is what you guys are saying, right? Like I mentioned before, right? If the 38.2 level is a level of support or resistance, that means that whatever has been happening, aka this downtrend, it's strong. So now let's see what's going on, right? Let's take some shorts here. Let's take some fucking shorts here, man. Just for fun. Right? Taking some shorts here. Shit's dumping. We're getting lit. 0% levels breaking, right? We're starting to hit our TP zone. Nice. You know me, I'm a paper hand guy, so I'll TP right there. Boom. And that's it, you know? It does what it do, right? 38.2% just rejected, and look at the trend. Strong, continuing, gone, right? Found some support, 5 EMA broke, and now it's catching itself back up. You guys see how beautiful that was? And look at that bullish divergence popped in. You should have been out. You know what I mean? Good, good, good. So I'm happy you guys are seeing this live. And where would we get in once it passes the 61 and 50? Well, from this example, the 38.2% rejection was supposed to be your entry level, right? That level of rejection, and if you wanted to be safer, you would also wait for a break below the 5 EMA with rejection of the 5 EMA. So let's say live, our entry, you know, me being conservative, I would have made us get in around 524, 523. And then we would have got that dip around 520, right? In this case, we would have gone puts, correct? Exactly, Ram. That's what I'm talking about. Nice. You guys see how the 38.2 level rejected? You guys see how the trend is strong? And you guys see how the trend continued, right? So are we seeing how beautiful and clear the Fibonacci works in a downtrend? We're gonna do another uptrend example. I want to make sure you guys are feeling good about this downtrend. We don't play that bounce, right? This bounce right here, I wouldn't recommend playing this bounce because the only confluence you have here, well, you know, so to speak, you have the bullish divergence. You also have, like I pointed out, you have a falling wedge here. You also got to, this is where the formation part comes into play. You got to start drawing out your little wedges. You see a break, you see support, and you're starting to see all these little support levels. This is enough to go long, right? But that's like a B minus setup. You know what I mean, Chad? Because the A plus setup comes when we get the breaks of the EMAs. You know what I mean? Or those fib level bounces. That's when we really get in. But this is like a good B minus setup. You know, it's good to scalp. You know what I mean? Nothing hard about that. Real quick, scalpy scalp, in and out. Not bad. And knowing the bullish divergence, you have room. So we look at how high the price went up, it continued going up. You know what I mean? Even though overnight, this one as high as to like 527, I think. But yeah, 526.46 was hit. So that's exactly what I was kind of trying to point out here to you guys. So how do we feel about the downtrend example here? I'm gonna go back to another uptrend example so you guys can see how the fibs work on uptrend. I'm gonna show you guys another day, pick another week, random day, and then we'll see how that example works there. A plus setup has both MA and fib and confluences. Yeah, mostly. You know what I mean? If you're going here, right, like that downtrend, right? You do a quick MA read, right? What I mean by a quick moving average read, you look at the moving averages and you're like, all right, is the 20 above the 50? No. So you check that, bearish. Is the 20 above the 200? No. You check that, bearish. What does that tell you? That tells you that the price is in for some long-term downtrend, right? Not a quick little downtrend. This is in for some dip. This is a dip. You know what I mean? Every time the 20 EMA is below the 50 and the 200, expect the price to dip down further. Vice versa. Anytime the price action runs up past the 20, every time the 20 runs up past the 50 and the 200, expect more uptrend. A plus is for more confluences. Yes, I like to always enforce that as well. 3 to 5 confluences is what I like to look for an A+ setup. Is there any way to discover the downtrend at the top, or is that too risky since there's no confluence? The best way to find out if we're topping out, I like to say basically is kind of look for pattern formations. For example, this right here, to know that we're topping out, first the first thing you're gonna look at is the 5 EMA, right? The 5 EMA holds support, trend is strong. 5 EMA breaks, trend is getting weak. Sign number one, topping out, right? Sign number two of topping out, 200 EMA rejection, right? That's sign number two. Sign number three, 20 EMA curled back below the 50. Sign number three, right? And guess what we have here? A little hidden head and shoulder, right? Boop, boop, boop. Your neckline's gonna be somewhere around here. Break below that neckline. Here's that little retest, and you get in on that dip. Like I say, I don't ever recommend getting in on the top reversal. Get in on the confirmation. Look how much money you could have made from the confirmation. No worries, Blaze Amazing. A head and shoulder pattern is a bearish pattern formation that basically depicts price action making some sort of like it's like a weird mountain looking thing. You're gonna see how it looks right here. I'm gonna show you. Hold on. So a head and shoulder always looks like this, Blaze Amazing. You get your little indicator right here, guys. If you go down here, 1, 2, 3, 4, 5. Hold on, three. Yeah, the sixth one. You pick path, right? If you guys want to double check your head and shoulders, grab the path indicator. I mean the path tool, and kind of like outline the head and shoulder. It has to go up, come down, go up, come down, go up, come down. You see this? That right here is a head and shoulder, right? That's textbook head and shoulder, right? You guys seeing that? Anybody that's new to patterns, you see it? You see how I just did that? Sometimes when we inputs, how do we know it will continue to fall or it will just bounce back? Or what is the safest way to play it out? When you're in puts, right? I always tell people, let's say for example, you got into puts right here, right? You got into puts on that Fibonacci rejection, right? Or let's say, fuck it, let's say you got into puts on the head and shoulder rejection, right? And you're like, damn, I want to hold my puts. I don't know what to sell. First of all, don't be greedy. This entire dip right here would have made you a lot of money. So you should have sold. But if you're still holding, the first thing you want to see is how the 5 EMA reacts, right? The 5 EMA is this little aqua blue line that I showed you guys. Oops, sorry about that. The aqua blue line that I showed you guys, right? When price tries to break above it and hold actual support on it, that's a shift in momentum, right? That means, hey, get out your puts. Not a good time to stay in the puts. Get out the puts. You know what I mean? Vice versa, right? So this in the downtrend is what you would see. If you want to stay in your puts, you would want to see how this level reacts. You see how we came up, kind of tried to hold support. Right here, this is where your nerves start to tick. This is where your alarms should start going off. This is where you should start thinking, I don't know if I should stay. You know what I mean? But if you were brave enough to continue holding, this breakdown is what you needed to continue seeing, right? For confirmation. This is where your conviction comes into play, right? Do you want to hold it and wait for a breakdown, or do you want to sell for the profit that you have already? Those are the questions you need to ask yourself when you're in the market, when you're in a trade. Should I take the profit that I made on this so far? Or should I wait to see if we, break resistance and we possibly, risk a reversal? You know what I mean? That's what it always comes down to. Because guess what? Look down here. We came down, we broke above the 5 EMA, and look how fast everything reversed. This immediately killing every put that you were in, right? LOL. So when that happens, once we see the bottom, should draw a new fib. Yeah. Basically, you draw a new fib on every I'll tell you exactly when to draw a fib, you guys. Hold on. Let me zoom out. Boom. You normally want to draw a fib on every new dip, right? So for example, this is a new dip, right? Dip, right? You can't put the fibs on this dip right here because it reversed, right? So ultimately what you would do here is put the fibs on this uptrend right here and find the next level of support, right? You play it out and see if the price wants to, respect the Fibonacci's. You see how the 38 just got respected? Right? This is an overnight session, by the way. I hope you guys know that technicals, tools, all this shit works no matter the session, no matter the time. Markets never sleep. Now you see how the 38.2% level held. You're seeing how the price is slowly picking itself back up. All right. We're peeping this movement, this action. We're seeing how the bullish divergence is still playing out. But once the market opens, this could be, this could be a dip. This could be a fake out. So that's really how that goes. You see how they're kind of making a double top here? It looks a little bit like a double top. Let's see if we're right. Is it a double top? Wow, beautiful respect of the fib. Yes. So the chart goes with the Fibonacci. If it breaks, it's bullish. Project is bearish. Yes, sir. Yes, sir. That's what I like to promote. You know. So we see how the 38% Fibonacci level held so much support. Although the volume is very low, price managed to kind of pick itself up from that level that it held. Eventually, the market opened. Pre-market, we're consolidating. And you guys know what's going on here now. It's a whole lot of consolidation. So right now it's in the golden pocket between the no, the golden pocket is a 61.8. Oof, look at that gap up. So you see how the Fibonacci level held, and now you see how the price gapped up. And you guys also saw how the 20 crossed above the 50, right? We all saw that, right? So those were two confluences plus the bullish divergence to give you a good sign that things were gonna look good the next day, right? So this is how I do my little breakdowns before the market closes, and then the next day I tell you guys, hey, things might be bullish, things might be bearish. This is how I find out. You know what I mean? So boom. The golden pocket, like I said, rock, sorry, is the 61.8. That's the golden pocket. The 38.2, that's a trend Fibonacci. If the 38.2 holds support, that means that the trend of the previous trend is strong. All right. So the 38.2% level holds support. That means the trend of the previous trend is strong and will most likely continue. If the 38.2% is resistance, that means the trend of the previous trend will continue, bearish, obviously, meaning we will continue that trend of dumping, right? Any questions here, you guys? I just gave you another little example of how the Fibonacci's work in an uptrend. Even with the market being closed, it still works. Could have swung some puts, I mean, some calls. I see. And in that move, it held twice and continued past the 0%. Yes, sir. It held once, twice. It seems actually this wasn't even a retest. This was a perfect retest off that level. It kind of never floated back down to the fib, and it just held consolidation. Always remember, guys, write this word down: consolidation. Consolidation means a waiting period. It basically means the market is just in limbo, waiting for the next breakout, waiting for the next breakdown. Consolidations like these, sometimes, especially in the downtrend, always expect them to lead to a break higher, right? Or in the uptrend, consolidations like these, always expect them, to break down. When price consolidates, it's basically just chopping, right? Consolidation is another word for chopping. Chop, 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 chop. At the end of the chop, big opportunity to make money, right? That's why I tell you guys, patience is so important. Even I'm a victim to it. You know what I mean? Even I can't be patient. Even I'm very like I have a hard time being patient sometimes with the fibs and the orbs and all that good stuff, especially with the week that we had just now. Very, very hard. Testing my patience a lot. Sorry, I didn't hear you answer the Q's question, but curious about it too. Hold on, I didn't see Q's question. Where's it at? Would you ever draw a Fibonacci going downwards? Uh, I did, I think already. Because the Fibonacci going downwards would be this right here, from up here to the most recent high, from the most recent high to the most recent low. You see the 38% level breaking down, and then vice versa, right? Perfect. All right. I see. Okay, thanks. No worries. All right, how we feeling about this little example here, you guys? I'm gonna show you another one, but this is just an example. It's always 100 to 0 drawing along the trend. Yes. And just to give you guys an example, this dashed line across the Fibonacci, we call it, hold on, let me see what it's called. I'm gonna give you the exact name of this shit. It is called the trend line, right? Meaning that if price is trading above this zone, trend is bullish. Price is breaking down below it, right? Ultimately around this zone, and it gets down lower, breaks down lower, can't find its way back up, then it's bearish, right? That's what this line kind of shows you. Splitting the evens between the bulls and the bears. If you guys know what I mean. So always kind of have this in the back of your mind a little bit, you know? In an uptrend, if the 61.8 breaks and it keeps going down below this trend line, now bears are taking over and they have more of an more of a possibility to reverse the whole entire move, right? So in this case, that didn't happen. That's why bulls had the opportunity to bring the price up to where it is. Can you show the fib during a hard, crazy week like last week? Funny you mentioned that. I'm trading last week right now. This is Wednesday right now. I just did Thursday. Now I'm on Wednesday. So let's see Tuesday. We're gonna go to Tuesday now, all right, guys? And this is just Fibonacci. I'm gonna show you guys another example on Tuesday, and let's figure out how. Oof, look at that. Tuesday was a very boring day. So, how to use Fibonacci's on Tuesday? You might be asking yourself. You would put them on the pre-market low to the high of that day, right? Let's put the bar replay real quick and pretend this never happened here, right? So, boom. You'll put the fibs from the pre-market low to the high of that day. This is most likely a break above the orb as well. I'm pretty sure we scalped this for calls. So boom, right? Let's say right now we're looking at how far up this trend can go, and let's see when the next level of support is, right? By doing that, we put the fibs on the most recent low, which is in pre-market, to the most recent high, which is outside of pre-market and outside of the orb here, and it seems to be a nice rejection level. So this is a good place to put the fibs. Now let's see where we go. With the cross of the 20 and the 50, it indicates reversal. Yes, it did indicate reversal, plus the 200. Hence the entire move right here. Most likely, we probably got into that 15-minute candle, which was... Oh, this was the 15-minute candle. So we actually didn't even get into a play. We were still watching. But ultimately, this was bullish. We just didn't have an orb break yet, so it wasn't enough to get into a play. Rather than that, we also had a very overbought RSI. So even though the Emmys were pointing bullish, things weren't looking as bullish because you could have been buying a top. You know what I mean? If it goes to the 200, that's another confluence. Not really. If it goes to the 200, it just makes the movement stronger. That's why you saw this much big of an uptrend, right? Once the 200 crossed above once the 20 crossed above the 200 and the 50, you managed to see one, two, all the way from 539 to 543. That's a huge move, right? And I hope you guys know that this cross happened around 539, 540. So that was a good scalp right there. Hell yeah. So that would have been a morning scalp, by the way. Just so you guys know. And I'm teaching you guys different confluences that you're gonna keep in mind when you're trading, okay? So boom. Now we got the fibs up. Let's see what's the next level of support. Let's continue to play this day out. All right. Boring. Nothing's happening. All right. You guys see that? Look at that. This right here was a fake out. That's why you got to move the fibs. You have to adjust as you go. Right. Now we're adjusting the fibs. Always adjust as you go. Never feel like you have to keep the wedges or the lines or the fibs. Never make it feel like, never feel like you have to leave the things the way they are. You can adjust as you go. That's what position is about, right? So boom. Hey brother, on Wednesday, why did it drop from the top in the morning? I think wait, Fish, what happened Wednesday that it dropped in the morning? I actually don't remember. Does anybody else here remember?
Uh, Wednesday morning, there was some sort of information that came out in the morning, but I think it was generally bullish. Yeah. Moonlight
Yeah.
Mavericks was bullish news in the morning. It was writing off that. Maybe,
Oh,
yeah. I mean, when it started
okay.
dropping, that had to be de-risking for going into
Whatever that we had in the
we had Trump,
afternoon.
we had Trump and Powell, I think, that day, didn't we?
Yeah, you're right. You're right. Yep, we did. We had. I think China news about Nvidia being hit with the license stuff too. Didn't that happen during Wednesday
That's
as
what it
well?
was. That
Oh,
was
Wednesday was a
Tuesday.
crazy day.
That was Tuesday, wasn't it? I don't know, man. The last week was crazy.
Yeah, bro, I'm gonna be honest with you. So much happened in such a short amount of time. Can you show me how to start the fib retracement? Millionaire, no worries, buddy. So just so we can retract the retracement real quick, I'll be really quick on this, guys. You go to settings, right? Millionaire. And right here, you got to change the colors, okay? Because they're all going to be different colors. You only keep the zero, the 3 point, the 0.382, the 0.6 ain't what, the one, and the 0.5 checked. Those are the only ones you're going to keep checked, okay? And then you change the colors of the zero, the one white, orange, 0.382, 0.618 red, 0.5 red, okay? Trend line, make it dashed, okay? It's the best way to do it. Uh, yeah. And opacity. Make sure anybody that still that has the Fibonacci's up, make sure your opacity is at 100%. Because if it's not, it's gonna look a little bit weird. But there we go. One serious question, bro. Why SPY drop when J Power wears purple tie was heavy in calls after I seen that purple tie? Guys, the purple tie is just a theory. It's a meme. It's not real. Wall Street Bets invented that. Every time we speak about the purple tie, don't take it seriously. It is not a confluence. It's just a funny thing that we take into account. Obviously, it doesn't matter. The market doesn't care about it. But yeah, man, don't do that next time, okay? All right, so back to our little lesson here. The question here is, where did the price bounce? Did it bounce off the 61.8? Did it bounce off the 50? This is what we need to also keep in mind. It's not about where the price really bounces. It's about where the price reacts. So you guys see how we immediately wicked off around the 61.8% zone, right? Very interesting. Keep that in mind. 200 EMA was also here, 50 EMA holding the body of the candle. Let's see if this is a strong enough level of support, right? Continuation. I completely don't remember what happens after here. Let's see if the price bounces back up from this level. All right, look at that. They bought it back up just a little bit. Look at that. Bought it up back even more. Bought it back even down. This is a horrible price action, but you guys see how the Fibonacci still works. It's still working. So if you have conviction, you would have never got kicked off this, right? Let's all keep in mind and let's all bear the fact here that the Fibonacci worked. The 61.8 held, and they did everything in their power to stop you out. But you being a trader with conviction, which you aren't right now, but one day you guys will be, so will I. Once you have that conviction and you know that they can't, it's not even about they can't go against it because the market could do whatever it wants. But once you have that conviction and your technicals and you know your TA works, you would have held this call from 539 all the way to 541, or you would have took a nice little scalp at 542. You know what I mean? Let's see if we break out of the 0% zone. Ultimately that's the goal, right? But regardless, with this kind of price action, you never know. So hold on real quick, let me see these comments. Where would you buy that call? That call, I would have bought it off of the next level of support. So I'm gonna be honest with you, Chad. It would have either been off the 50% break, not the 50%. It would have been off the 20 EMA break. So you see how this price went above the 20 EMA and the 5. That would have been my entry, right? Because that would have been a continuation candle from the 61.8. So I would have tested my luck with that. Obviously, we need more confluences. So I would have told you guys, hey, let's wait for more confluences. But right now, I'm just showing you an example of the Fibonacci on its own, by itself. Right, guys?
I
China,
remember.
so when you draw lines going from the lowest to, oh, what's up, Fish?
I was going to say I remember this exact moment, and when it bounced off the 50, that's when I jumped into a call. I remember.
You
I remember
did.
this.
And he was holding. He was holding.
Yeah, you remember this one, right? And I think right before it, I was in a put, and then it slammed down. I made good money, got out of it, and then jumped into a call there when it bounced off the 50.
Yes, sir. Remember that shit
Damn,
like it was yesterday, too. That's the funny part.
damn. All right,
China. So when you
let me
draw
mute
lines going from
myself.
the lowest to highest, no, you good, man. China. So when you draw lines going from the lowest to highest fib, you're looking to catch the uptrend, right? Yes. So when we go from the lowest to the highest, we're looking for the next support level, right? The next level of entry for continuation, right? In this case, we don't know if we're doing a double top here or if we're actually, breaking out. So, judging by all these wicks and the price action being as choppy as it is, you have to take what you can. Okay, that's why I tell you guys all the time: take what the market gives you. Don't force it. Right? There's gonna be times where the Fibonacci retracement doesn't fully work out, and you don't get that 0% break. This might be one of those examples. Let's see. We might break down. We might break up. I would have been out of the play already. I would have been out around here or around here. Right? That 5 EMA break is disgusting. This chop even more disgusting. All right, 50% support. That's good. 38% support, bullish. Let's see if we continue breaking up. All right, they're working on it. This is all consolidation. It is not a double top anymore. Get in, get green, get out. It's been helping me so much. Yes, sir. All right, now it's starting to look a little bearish. There you go. You see that little breakdown? Never want to run that risk. The 61.8% saved the day again. But will it save it? Seems like it's getting a little weak. Oh, that's ugly. Now we're getting a whole entire reversal of this move right here, right? So you should have been out already. 61.8 reject support, exit around here, or exit around here, or around here. You had a bunch of exits here, but the next candle was always going to be that stop loss hunt. You guys see what I'm talking about? Also, there's a bearish divergence here, so that should have told you to get off calls as soon as you got the chance to. All right. So let's say it's 9:30 where it's going up. Since it hasn't reached the top yet, we can't draw the fib yet, right? And if we can't hold, we can't. Would we just go off the 20 and the 50? It's basically what I try to promote most is that when the 50, when we're going, when we're at an uptrend, right? You want to wait for a reversal. You want to wait for that next candle that breaks below the 5 EMA, and it's kind of giving you the sentiment of, all right, the price isn't going to continue breaking up, so maybe it's safe to put my fib up right now, right? You put the fib up, and if the next candle breaks above that level and never comes back down to trace, to retrace anything, then you still have more uptrend and the trend is still strong. Obviously not a good time to put the fib yet. That was a beautiful rejection off the 61.8. Yes, it was. And look how the fibs turned against them. uh Chad, what you just pointed out, very important. The fibs can work for the bulls the same way it can work against them. Once that 61.8 level turns into rejection, now you know that they're on their way to sell off the rest of the move. They want to sell off everything, right? Would you draw a wedge here or for the consolidation? For the most part, yeah, I would. Because I feel like the wedge here would be best if you draw it. This is how I draw my wedges, guys. Highest point, come down, find a wick down here. There you go. Little wedgie wedge, right? Now, for me to get bullish again, I'm gonna wait for the 5 EMA to get that support. I'm gonna wait for the 20 to break up above the 50, and I'm gonna wait for the wedge break, and I got the bullish divergence down here. So let's see what's going on here. Let's see if my thesis works. How would you find the bearish divergence? Hi Z. The bearish divergence is an indicator that you can find on TradingView called the RSI divergence indicator. Right? You find it, you click it, and once you add it into your chart, it shows you all the divergences on the chart that you can find, and it helps you identify them so you can figure out if the price is going to lean bullish soon or bearish soon. Right? The bullish or bearish divergences, they're not indicators that you're going to rely on solely. They're weak indicators in my eyes. They're just good indicators to add on for extra confluence just in case they do play out. But the thing about them is that sometimes they're late, sometimes they're early. So this RSI this bullish divergence here, you can see how it never really played out. But we'll see how we can see how like it's gonna end up playing out probably the next day or the day before that. Let's see if we exit this, we're gonna see that that bullish divergence ended up playing out. Where was it? Tuesday, right? There we go. It ended up playing out throughout the night. But it didn't play out the way it was supposed to because there was a dip and the RSI divergence played out for a push up to 537. So this was all a bear tactic. So this you don't really take into account. What's the importance of the RSI indicator? What is it reading to make it bearable? It's basically reading the momentum, right? So it's reading previous momentum to identify if the momentum that's being given right now is enough for a bullish movement or a bearish movement, right? So those divergences, you keep them in your back pocket. It's a good way to read the RSI, and it's definitely an additional confluence to add. So that was RSI. Sorry, that was Fibonacci retracement on an uptrend and Fibonacci on a downtrend. How do you use the RSI on days with big moves? Oftentimes it's lagging. Basically, on days with big moves, like for example, this day right here, right? There was no bearish divergence, right? So there was obviously nothing to tell us that there was going to be a bullish move here, right? The bullish divergence only popped off. Well, don't you just turn it off? Yeah, I'm not gonna lie. Sometimes I turn it off, and you guys know why. Sometimes when the movement is too strong and the RSI is out of the picture, I take the RSI off and I just follow the 5 EMA. So even you guys know that as well. So boom, real quick. You see how there was no bearish divergence here? The downtrend was given through to us through Fibonacci's, and they were given to us through EMA rejections and as well as support and resistance flips, right? So the bullish divergence here popped up only for a momentum, right? Which was all of this right here. You ask yourself, why is there a bullish divergence there and what's it for? It's here for this momentum, right? It popped up in the picture because it was basically hinting at possibility of a momentum shift, not a complete shift, but basically a movement that was going to indicate some sort of, irregular volume. Do you know what I mean? Irregular momentum, right? So for example, this last move right here was a good momentum move to take end of day. And then this bearish divergence ended up playing out, grinded down. Let me find the one with, so these are all choppy days. So I'm trying to find a day with a good good movement. There we go. Okay. So boom. We had RSI divergences on this jump up right here, right? They started forming around here and they ended around here, right? So this indicator showed us that at some point during the night or at some point, during the next day, there was going to be a bearish move, right? The night shift came and the dip happened throughout the day. Started at 5:30 and ended at 5:09, right? It didn't go lower than 500, which was bullish, and that's kind of a little bit of part of the reason why we're like where we're at right now, because bulls kind of managed to use the RSI in their favor to continue pushing the price higher. It's similar to BB. Sometimes the movement is strong, so it can't keep up. Yeah, Mirage, I completely agree with that as well. Yeah, definitely do agree with that as well. So that's why I tell you guys, don't only solely base yourself off of the divergences. You know what's funny? This wasn't even one of the indicators I was trying to show you guys. But this is just one of them that, you keep in your back pocket. If you found a bunch of confluences and in the back you see the divergence there, you're like, oh shit, okay, the divergence is also signaling a potential move. So you add that in the bag of confluences and now you have an extra one. You know what I mean? That's kind of how it is. Kind of how some people use MACD, right? We got people with MACD. MACD sometimes is early, sometimes it's late, but it's a really good indicator. I actually prefer that over the RSI. I just don't really I don't have the, MACD on the screen because I like having the RSI on the screen. It's just preferential things. But the MACD, when it pops up, it's a good confluence to add in the back of your bag as well with everything else that you see. So it's really good. Wow. So most of the time we look at the divergences on yesterday and we can predict today's move. Not predict, but you can get an idea of what might happen. You know what I mean? And the way you could find out if it played out is by reading basically reading the RSI from previous moves. For example, this bearish divergence right here, it hasn't fully played out in my opinion because the previous bearish divergence that we've seen, for example, this one brought price all the way down to RSI 16. This one brought RSI all the way down to 28. This one brought RSI all the way down to, I think, 29, 27. So as you guys can see, the RSI, the bearish divergences always bring the RSI below 30, right? That's their goal. Bullish divergences, they always bring the RSI up to 67, sometimes 76, but definitely above 50, right? So for you to know that the divergence played out, it needs to get to an overbought or oversold zone. So the bearish divergence getting to oversold levels played out. Bullish divergence getting to overbought levels played out. You know what I mean, guys? I'd add to that. Never solely rely on a single indicator. Yes, definitely. So boom. How do we feel about the Fibonacci's? I'm about to move on to VWAPs. How do we feel about the Fibonacci, you guys? Get a little temperature check. How we feeling? Thanks, Cube. Too good. I feel like I'm gonna be a millionaire next week. It's one step at a time, man. We'll be good. Just gotta stay consistent, guys. Even me know English, I can still understand. Ah, that's dope. Love that. Yeah, you should be a Zoom teacher. LOL. Well, I'm here with you guys. We're tapped in together. I know I'm gonna be a lot more disciplined though, so hope so. Good, good. All right. So it seems like we're good with Fibonacci's. Now we're gonna use anchored VWAPs. So there's two ways to use anchored VWAPs. So does anybody here trade with their regular day trade 5 minute time frame? And somewhere else, do they have or do they flip between five and let's say it's 15 minute or 30 minute or hourly charts? Let me know if anybody here really does that. Like, who likes to look at the small time frames and then they go to the big time frames? Cool, cool, cool. So I'm gonna show you guys two ways that we could use the VWAPs for basically people like us. You know what I mean? People that like to look at different time frames, right? So 1 minute, 5 minute, and 15. Beautiful, and love to hear it. All right, so let's start off with the VWAPs. Let's go back even further, man. Fucking empty this shit. Remove two drawings. Let's go back even further. I'm gonna pick a random day, okay, guys? All right, this day looks cool. Let's see right here what's up. Yeah. Oh shit. Kind of holds there. All right, fuck it. Okay, let's pick this day. Screw it. April 2nd, all right, guys? Especially for MACD reversals. Nice. All right, cool. So boom. Let's check out the VWAP, right? So anchored VWAP. One, two, three. I think it's the fourth one. Good. Yes, it's the fourth one. You go to projection, you go all the way down to anchored VWAP, you click on that bad boy right there. And the way I use anchored VWAP in short time frames, anybody that uses time frames from the 5 minute and lower, the best way, in my opinion, to use the anchored VWAP is to apply it to the first candle of the day. That simple, that easy, that quick, right? So boom. A lot of us are probably asking, why the first candle of the day? Let me tell you exactly why. Anchored VWAP is basically going to show you the volume weighted average price throughout the day. If you put it at that level, if you put it at that level, as the day progresses and as we get more chart, you're going to start to see how the VWAP is respected by the price, right? Meaning you're going to see where volume is leaning towards throughout the day, right? So if real quick, does anybody need let me show you guys how to set up your anchor VWAPs because I'm pretty sure I need to drop a video on that. So real quick, let's show you guys how to set up the anchor VWAPs. Once you put the anchor VWAP on your chart, you click on it, right? It'll pop up around here somewhere. Hold on. There we go. You click on it. Once you're clicked on the anchor VWAP, you click settings. All right, you guys. And this is all I really changed. Just the style. VWAP, make it white. Lower band, nice little hot pink. Upper band, nice little hot pink. Inputs, HLC3. Bands multiplier 3, unchecked, unchecked. Bands multiplier 1, checked. Standard calculation. Nothing crazy here. Visibility, nothing crazy here. Everything the way it should be, okay? We good on that? So boom. The way the anchored VWAP works is if price is trading above the purple band, oh, it's all good, man. As long as you can have different colors, we can have the same colors, whatever works best for you, right? Color codes, that's all preferential at the end of the day. But real quick, above the top VWAP here, sorry, could you go back? No worries, buddy. Inputs or style? Which one is better, Rock? Both, no worries. So style, this is what I got. White, pink, pink. Everything else pretty norms. Untouched, meaning inputs untouched as well. To be honest with you guys, I don't really touch anything here, just the colors. Whatever's easier to see on the chart. Let me know if we're good. No worries. All right, perfect. So back to our lesson. Just a tip. I'm taking pics with my phone so I can change the settings after. Hello. Nice, nice, Ant. Nice. Yeah, take pics. Do whatever you guys need to do. As long as you guys are feeling comfortable. All right. Moving forward. So, anchor VWAP, right? There are three lines that you're going to keep your eyes on, right? And these lines are actually, let me take out the EMAs real quick here, you guys. We're going to do straight raw VWAP, all right? Yeah, you got to record this video or something, Brody. No, I completely understand, guys. It's just, I'm using my phone for a microphone and, I got the stream going on one of my, screens over here. I'm not that tech savvy to like, I don't know what programs to run and all that good stuff. I apologize for that. I know I could accommodate, but once I get the hang of it, I will. Now, real quick, three lines, three reasons for these lines. This first line right here is the top band. This middle line is the VWAP line. All right. The white line in the middle is the VWAP line. The top is the band, the top band. We'll just call it the top band. And then the bottom band is the bottom band, right? So to make this even easier, top band, bullish band, bottom band, bearish band. All right, y'all? So if you guys realize what happens with these bands, when price breaks above the top band and holds above it, it's bullish, right? It's a momentum indicator, meaning volume is leaning towards bullish, meaning bulls are carrying volume. The average price of the volume is being driven by the bulls. That's what that means, all right? If it were to break below, means bears got it, right? Now, what happens trying to make it if the price is just within the VWAP, within the bands? What do we do then? Nothing, you know? In that moment, what you do is just wait because that's a chop. That's not just a regular chop, that's a disgusting chop. That's one of the chops that you don't want to have your money in because number one, it moves too fast for your liking. Mirage, exactly. Number one, it moves too fast for your liking. Number two, it's unpredictable. And number three, you won't know where the support or resistance is until the mid VWAP decides where it wants to go. For example, first candle of the day, second candle bounced off the middle VWAP. That is bullish. Okay. Second candle broke out of the VWAP. Bullish. Third candle holding the body of the candle on top of the body of the on top of the top band, right? So you guys are seeing how little by little these candles are just moving higher, grinding higher. You guys are seeing that, right? So in retrospect, that makes you believe that the price action is bullish. All right, bullish. Looks cool, looks nice. Let's see how much we hold above it, right? Okay, you see how we're getting tested now? We're coming back down into the VWAP, and now we broke above the VWAP. These are tests, right? You never want to fall for these tests, but as long as the price is holding above the mid VWAP here, it's bullish. So you just want to make sure price kind of holds here. So if your entry was on the first candle of the day, right, DGen style, let's say for example it was the first candle of the day, that was your entry, you're going to make sure that the price doesn't break below this white line, right? So let's see how bullish we are moving forward. Let's see how high up this price is going, right? VWAP support, back above again, back above again, back above again, back above again. Look at that. VWAP bullish. Bullish divergence playing out. Back bouncing off the VWAP again. Bullish, bullish. You guys are seeing what's going on here? You guys are seeing how the middle VWAP was the level of retest. Do you know how many times we've been faked out by this middle VWAP? Fish, yo, you're in tune, right, my brother? How many times have we been faked out because the price wanted to come back into the VWAP and touch this little white line?
Bro, I'm seriously sitting here going, "Oh my god, so much money, so much money." But it's cool, man, because now I'm just gonna be pestering you. Yo, can you throw that VWAP up? Yo, can you throw this Fibonacci's up? Yo, man, come on, come on. I need you to do that for me, man. Come on. I did something I wasn't supposed to do, man. Now I'm scared, you know?
Oh man, I love to see it, man. And I'll be honest with you, this is good
This
for
is
me
an
as well, you
amazing
guys.
session, bro.
Oh yeah, it was needed. It was
Th-
needed for me. It was needed for
This is
all
an
of us.
amazing session. You really are making this like so accessible for everyone, and
Thanks,
like
Fish,
everyone else.
man. I really appreciate it.
Yeah, of course, man. Thank you.
Thank you, man. God bless. Thanks, fam. I appreciate it. So, like I was saying, you guys, that middle VWAP is always gonna be that zone, right? Bullish wise, breakout above the VWAP, they're always gonna come back down. Bulls are gonna make sure they have this mid VWAP level as support so they can continue the trend. And you saw how this perfectly happened here. This could have been another level of entry as well, right? In retrospect. But essentially, the bigger picture here is what? Above the VWAP, white line, bullish, right, guys? Below the VWAP, bearish. Beautiful example of how we use the VWAP in a bullish territory. Now, we're going to show you guys how it works in a downtrend. So, what day is this? Wednesday, April 16th. I want to pick another day. Let's go to March, man. Take this out. Uh,
Hey,
how we
trying to
feeling
make
about
it.
that VWAP, you guys? And what's up, Fish?
I just want to say another thing that just because it seemed like you had a little time there, man. I just wanted to say thank you for taking part of your Saturday
Oh,
night
then
as
you cut
well,
off a
man.
little bit, Fish. What'd you say?
Uh, I said thank you for taking
Oh,
part of your Saturday
anytime,
night,
bro.
man. Like that's huge. Saturday night of your Easter weekend, bro. Like that's huge. Thank you for that, man.
Anytime, bro, man. I put my family first, bro. You guys are everything to me, bro. Honestly, like you guys are making the dream happen. You know what I mean? If there's anything I can do to literally pay you back and it's something like this, any day of the week, more than happy to do it. And I appreciate that, Fish. I appreciate you appreciating me. I appreciate you, Chad, Rock, Ant, Moonlit. Thank you so much, you guys. I really do appreciate it. Thank you very much, Glam Drink. Chad said, would you turn off the Anchor VWAP after every session? Yes. If you're day trading, Anchor VWAP is only good for the day, right? Next day, you put a new VWAP on the first candle of the day. Rinse and repeat that. And what's the importance of the VWAP, said Rock. So, like I mentioned, it's a good way to kind of calculate the volume and where it's leaning towards for the day. Mid VWAP, that little white line, you guys, is what I told you. It's going to be a level of support, right? For bulls or resistance for bears, obviously. If you always see how that level reacts, it shows you where the volume is leaning towards. When would you just leave the VWAP on? I was going to get to that. That is how we use. I was going to get to that when we use the VWAP on the higher time frames. So let me show you one more example for the VWAP on a downtrend for day trading in short time frames, and then I'll show you guys how to use the VWAP on higher time frames, or how I use the VWAP on higher time frames, and then I'll show you how long I leave it for. All right, so downtrend VWAP. This is a big loop de doop. So let's see how we would take care of it. Bar replay. Go back. We're gonna start the day off fresh here, okay, guys? Fresh day. It is April 1st, Tuesday. Let's see what's going on here. We're gonna put our VWAP on the first candle of the day once it opens up. All right, giant red candle to start the day. Beautiful. Let's pause it there real quick. Throw our VWAP on that bad boy. It's funny. That's also our orb, right? On the 15-minute. I think we're actually making our orb here. So we have our VWAP up. Now we're gonna wait for the price action. Okay, you guys. When you have VWAP up for the first candle of the day, you're never gonna get the movement from the first 2, 3 candles. You need to wait for a couple candles to get that movement, right? Right now we're chopping, not doing much here with the VWAP. You just want to give it a chance. All right. So now we're gonna pause here and let's see what's going on. Everything happened a little too fast, but let's catch up here. Boom. VWAP fake out. This is the VWAP fake out. Let me show you guys how that works. VWAP fakeouts occur when you get a break above the VWAP and then you get some sort of support, but then the next candle breaks right through the middle white line VWAP. That right there is a fake out, right? And how are you gonna make sure that it's a fake out? The next candle. Do you guys see how this next candle held body rejection off the VWAP? Hold on, let me see right here. Okay, perfect. You guys see how the body rejected off the VWAP here? Tried to wick above the pink line, but it couldn't do it. The body rejected perfectly off the VWAP. Next candle couldn't even wick above the VWAP, meaning price action is very weak. This candle would have been your entry since it's outside of the VWAP and it rejected the VWAP. So we're gonna see how far it goes for us here, right? Well, this candle would have been a good TP. This candle would have been a good TP. Let's see if there's any more juice to it. All right, they brought it back up there. You'll take your profit on the top of this candle here. There's gonna be a TP zone. Let's see if we get a rejection from the VWAP. All right, nice little rejection. Oh wow, we got taken out here. Boom. That was gonna be a nice little quick scalp here. So that's how you kind of see VWAPs. VWAPs, you kind of see how it work. It doesn't work its best in choppy environment. In choppy environment, it's good for scalping, right? We saw that. Good little scalp to the downside, quick little scalp to the upside, not bad. But in a choppy environment, VWAP struggles a little bit. I can't even sit here and say that VWAP is 24/7 best, best, best. Nah. VWAP has its weaknesses, and its weaknesses is going to be this kind of environment, right? If I continue showing the price action, you're going to see how it continues playing itself out. Now it's leaning bullish. It's above. You see that? There you go. Nice little scalper's paradise here. We broke structure here with the previous high. Now calls are printing, right? So ultimately, the VWAP worked. It worked here, right? Worked here a little bit for the downtrend, works perfectly for the uptrend, and now we're getting a little bit weak, touching the VWAP, the top of the band here. Still looking strong. We bounced off of it. You're still holding your calls here. Still holding those calls. Still holding those calls. Look at that. Still looking good here. So at the end of the day, you kind of do see how the VWAP helps you choose that direction, you guys. Are you guys seeing how beautiful this is? And then as you see how it broke inside the top band here, that was already your sign to get out. So let's see real quick what happened here. You got to give it a chance, right? The more, basically, what it comes down to, you guys, is the more price action you have, the more chart you have, the more candles you have, the more you'll be able to, point out a big picture. The more you'll be able to see what's going on, right? Boom. That's exactly how that works, right? That this was a somewhat of a good example of the VWAP in a downtrend. I kind of want a better one that we could ride. But how do you feel about this? And when do you change the position of the VWAP? For day trading, I only change the VWAP every day. Meaning I put it on the first candle of the day and I don't move it until the next day when we put the VWAP again on the first candle of that day. Right? And that's how we use VWAP for day trading. Right? So let me see if we could use it. Okay, perfect. This is a good example of VWAP and downtrend. All right, guys. So we're gonna replay around here. Boom. Alrighty. First candle of the day. This bad boy right here. Now let's see where we're going. Let's see what story we got. I need this shit to be slower. Hold on. All right, maybe that's too slow. All right. Let's see what story we got here. Hold on. I got some questions. Let me see these questions real quick. Yeah, this just shows that relying on any single indicator will fake you out. Yeah, Mirage. Exactly, man. I'm just showing you guys the single indicators, and then I'm gonna show you guys how they work together. And you guys, I hope you guys are getting a good idea of how they work alone, so you can see how they end up working together. You know what I mean? Would you watch VWAP in a different time frame if put on the 5 minute? Yeah, I do. I was after this. I'm gonna get to the VWAP on different time frames. I put the VWAP also on the 15, the hourly, and the 30 minute, and I'm gonna show you guys how I do that now. Okay. Let me just show you guys real quick how this day trading VWAP works on a downtrend. So boom, VWAP breaking down, right? You're seeing a rejection of the white line here. You're seeing a breakdown of the purple band here. You're seeing rejection of the purple band here. And now you're seeing complete rejection of the purple band here. This is going to be my point to get into some puts, right? Oops. My point to get into some puts here. Boom, let's see where we go. So now we're below the VWAP band here. Still below it. You're still going to hold your puts because you got in around here. You're still going to hold it. Still printing, still good, right? Your exit is going to be any level above this level right here, right? Boom. That's gonna be your exit. All right, we're still going. Bring the TP down lower. Right. Remember, I tell you guys, bring that take profit always into profit. Right. It's looking a little consolidative here. Bring that TP down a little bit lower now. All right. All right. Now we took profit. Boom. Gone. Right. Quick little way to use the VWAP in the downtrend. Right. Take profit. Always bring it into the profit. You know what I mean, you guys? Always ride the momentum. Right. So if we bring the EMAs into here, you would have seen the 20 is below the 50. Confluence added into the perspective. You already know what's going on. We got two confluences there. And on top of that, we're most likely, we're looking at an orb break here as well, I assume, if we had the orbs up. So these kind of things you just put together, and that's the decision that you end up making. Hey, bro, can you bring the VWAP setting again? No worries, Wazy, I got you. How you guys feeling about the VWAP for day trading, on downtrends and uptrends? Put a little thumbs up if you're feeling good about it. Let me show Wazy this indication real quick. Wazy, this is what we got going on here. This is the settings for the VWAP, all right? Anchored VWAP. You're gonna find it on your left-hand toolbox. Is gonna be the fourth option. It's gonna be right in projection, volume-based anchored VWAP. Nice, you guys. Tough, tough, tough. Thumbs up, thumbs up. Love it. Nice, Hazy. All right. Now, VWAP in higher time frames. How do we do that? All right. Completely different from how we use VWAPs in day trading. Instead of using, I see how the candles are going with the VWAP. Yes, sir. Nice, Hazy. Nice. You guys are great. Appreciate you guys. All right. So, boom. VWAP. Let's go to the 15-minute. I'll start off with the 15-minute. All right. Just for an example. Right. So, how do we use the VWAP on higher time frames? I like to use VWAPs on the highest point I can find. Right. Basically on my screen. So, this is all the price action I can fit on my screen. So I want to mark my VWAP on the highest point of this level, right? So boom, I grab my VWAP, I look around, try to find the highest candle, try to be as rough with it as possible. Rough little estimate seems to be this one right here. All right, boom. VWAP added to the highest point on the chart. And this is how you're following the price action, right? You can keep this up for days, right? You can keep this up for days. Why? Because this is the highest point and we've been trending down. And this VWAP you can hold on to for days until the mid white line breaks. Once that mid white line breaks and holds support, you're going to see a shift in trend, shift in momentum. You guys see, since I put the VWAP at the highest point ever since that time, ever since that level, we only broke above it once, twice, made a double top, triple top here. And ever since then, that below the VWAP was all you needed to know to see that the price was bearish, right? Add a couple confluences onto this, like a MA cross, divergences over here, formations, triple top, and you're in for some puts, man. And you know what's funny about it? The fact that it's holding below the VWAP would make you feel comfortable enough to continue holding because your entry would have been somewhere around here, right? Would it be fair to use 4 days? Yeah, honestly, the longer you keep the VWAP, the better. But if you keep the VWAP for this long, we're gonna keep holding on to it, right? Until basically it breaks out. In this circumstance, we'll hold on to it until it reaches the midpoint. The midpoint where it almost crossed the white, where it crossed the white would have scared me. If you would have got in here, this right here would have scared a couple folks, but it didn't break out, so it was a fake out, right? Mind you, it still wouldn't even have been a bad exit if you got in around here. So, regardless of the fact, it was still a good entry. This probably would have been a re-entry level, if anything, to double down. You know what I mean? It's basically a trend line like this. Yes, exactly. When you're looking at the VWAP on a higher time frame, it acts as a beautiful trend line support, or resistance in that case. You know what I mean? So we see we're still bearish. Nothing's happening. We're still good. We're still good to use the VWAP. Still good to use the VWAP. Look how much money was made. Still good to hold. Puts for days. All right, now you're starting to get out of your puts a little bit. Looking a little weird. Could have taken profit if you were tired of holding that position. Eventually, it's gonna want to break up. Still not doing it. There we go. Oh, still bearish. You guys see what's going on here? Still bearish. No matter how high that RSI goes, price is still bearish, man. It's trying, but it can't. You know what I mean? Trying. Look, kind of getting there now. Yep, there you go. There we go. Okay. So exit would have been around here. Obviously, all three of these points would have been exit. Yeah, I'm just worried if I'm following the VWAP and then a huge green dildo candle comes out of nowhere. That's why you can't just follow the VWAP on its own rock. The VWAP, you want to use it with other indications. You want to use the VWAP, right, with MAs. You want to use with Fibonacci. You want to use it with other indicators, right? Not just by itself, obviously. How do we find the support on the downside? This is the day that basically the support on the downside, when you're in a downtrend like this, what you're looking at is basically resistance, right? Since you're in puts, support is the last of your worries, right? Obviously, you're gonna want to see support, obviously, because support is gonna be your sign of reversal. But as long as the price keeps resisting where it needs to resist, your position in puts is always gonna be valid, right? Once it does find some sort of support, you can start to look for, levels of exit. Obviously, when these bullish divergences start popping up, don't ignore them. You know what I mean? And then when Mirage said, "For the love of God, please respect the stop loss." Yes, have a stop loss, and have conviction as well, because not conviction, sorry, constructive criticism, constructive thoughts, thinking process, because when you see the VWAP is still bearish, but then you see bullish divergences, these are contradicting indicators. That would be your sign to get out. You know what I mean? Even though price action is still choppy, still bearish, you don't want to take your bets because look what happened after, right? Once those bullish divergences come in the picture, anything can happen, especially with those bearish divergences. You know what I mean? They could come into the picture, and then look what end up happening. Still figuring out how to do a stop loss on Robinhood. You guys also could do manual stop losses. You know what I mean? Have a price in your head, and you're like, all right, if my Robinhood contract hits 20%, I'm gonna sell it no matter what happens, right? Same thing with if my contract hits a 10% stop loss, I'm gonna sell it no matter what happens. That's why you have to train and train and train and train your entry. Always make sure that what you're working on is your entry point. If your entry point is good, you won't have to worry about being stopped out. That's what we're always focusing on every day. Can you do VWAP on daily chart? Yes, you can, Chad. Same thing applies on the daily chart. You're gonna put the VWAP on the highest point, right? That would be this candle right here, right, Chad? So look at us. We've been bearish below that VWAP. We only tested it one time on the 597, and look how many dumps we've had since then. Boom. And look, we tapped it one time, beautiful dump right back down, right? So now, Chad, the question is, are we going to touch that VWAP again? Maybe. We might, you know? VWAP is 573. It's only right if we touch it again, right? So yeah, that's how we use the VWAP on the daily. Can I tell you something? Works the same exact way on the hourly, right? Let's go to the hourly chart real quick, right? Hourly chart. What do we put the VWAPs on the hourly chart? Highest point, guys. Know what I mean? Same kind of predicament here. Same vibes. Bearish price, still bearish, right? So all in all, what I'm saying is the way I use VWAPs on higher time frames is I put it on the highest point that I can find on that time frame, right? That doesn't mean I zoom out the chart to try to find the highest point, meaning I'm not trying to if you're on the daily, your highest point is obviously going to be this point, right? If you're on the hourly, your highest point is going to be this point. If you're on the 15-minute, your highest point, it's a funny part, your highest point in the 15-minute chart is going to be this one, right? If you got a new high point, it would be this one. So whatever high point you have on the VWAP, I mean on the chart is where you're gonna set it. What happens if you set it to the lowest point? X, good question. That is something I've been experimenting with lately as well. For example, right around, let's say right here, right? For example, put the VWAP right here. You can see how it kind of gives the opposite effect. Bullish, support, bullish, no support, chop, chop, chop. Don't want to be involved with that. Bullish, 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 bearish, bearish. Kind of works the same way. You know what I mean? Very preferential. But I do believe that the way that I've been applying it from the highest point, very good because I've been using it and I have more, conviction behind it. But I do want to test out that way that you mentioned, which is a pretty good way as well. I think I heard you say earlier when the market opens, you put it under the first candle. So do you start out with then do the highest point? No, the highest point is only for the high time frames. All right, the high time frames like the 15, the hourly, the 30, and the daily. That's when you put the VWAP on the highest point. Right. For day trading, like Mirage said, that's when you put the first candle of the day. Yeah, I just watched the dollars and read, and I turned into Mr. Krabs. Dollars grow. Change your mind from dollars to percentages, and I promise you'll go a long way with that. All right. So how do we feel about VWAPs and higher time frames? How do we feel about them? Feel good? And then a little update, guys. How we feeling? Awesome. Nice. Great. And said, can you show how to use the stop loss indicator on the chart? And stop loss indicator. You mean the this? Let me make sure we're on the right page. That green box. Oh, so this, right? Okay, cool. So this, you're gonna find it right here on the fifth one. It's gonna be right here, okay? You click projection and then you have long position and short position. I put a star on both just to have easy access to them. So this, in this circumstance, this would be a short position, right? Let's say I'm looking at you guys and I'm like, off the bat, hey guys, I see a double top here, guys. Let's get in for some shorts. On the neckline break, right? The neckline's gonna be around here, blah blah blah. Oh shit, hold on. Neckline's gonna be around here, blah blah blah. We got a neckline right there. Giant bearish candle. We're gonna get in on this rejection right here. You know, it's funny we could put the fibs right here too. 61.8% Fibonacci support, bounce, projection, dump. 61.8 failed to hold support. That's your confirmation, plus the bearish divergence. 3 confluences right there to go short. Now you're gonna project it like this. Boom, right? So in retrospect, it'd be something like this. I tell you guys, all right, guys, if we get a double top formation here, we're gonna get into puts. You know how sometimes I project, sometimes I'm like, all right, guys, maybe we might get a double top here. Let's see what happens, right? And let's say it comes up for a double top, comes up here, right? And now it rejects good. So boom, I'm starting to feel bearish. I'm like, all right, I'm feeling bearish, guys. Let me put this here. We're gonna get in on on this rejection candle right here. Basically, how the next candle opens, we're gonna get in. If it breaks above, I usually line it up like this, right? I line it up with the previous candle. You see what I'm doing here, Ant? I'm lining it up with previous levels, right? Yeah, so if I line it up with the previous level, that's going to be my level of stop loss. Meaning that if I'm in a contract, if I got in around here, I'm going to put my line right here. I got in right here at the end of this candle, right? If the price comes back up to this level, I'm going to sell, right? But if my entry's good, it's going to continue dumping, right? So let's see where we're at, right? So we're still here, all right? Candle's red. We're looking at it, still dumping. Bearish divergence playing out, looking good. So you see how it's continuing to dump here? Broke below TP. That's when you continue to bring it down. Strong rejection wick. RSI is oversold. This is a good level to take profit. Take your profit right there. We're gone. You guys know what I'm talking about? How do you feel about that, Ant? Is there any way to take a contract from TradingView directly, like trade from the chart literally? Um, I'm not 100% sure, Chad. I think you only could do it with futures directly with Tradeovate. I don't think you can do it with SPY. I would love that. That'd be amazing, man. Trust me. That's the way I would trade with you guys, you know? So yeah, Chad. You basically always put the middle line, always put it where your entry point is, wherever whatever candle you enter in, that's gonna be your, where you put the middle line, and you're gonna keep that level as a psychological level in your head. Like, all right, if the candles go inside that red box, it's time for me to sell. Let me ask Fish a good question here. For example, Fish, when you get into a contract, do you put your phone down and look at the chart, or do you stare at the contract and you stare at the money? Well, how's that process?
When I'm getting into a contract or when I'm in the contract.
When you're in the contract and you're in the play.
Okay, so when I'm in the play, I've got my phone in my hand. I'm constantly fucking refreshing it, right? Like just constantly refreshing it. And then I'm also watching the charts and I'm trying to watch like how the price action is moving, watch how the indicators are moving as well. And of course, listening to what you say, checking in with Joe and John about their MACDs, making sure that the MACDs still line up. As soon as the MACDs start to change, that's when I start looking for an exit.
Nice Fish. Exactly. And that's really good to hear. That's a lot of confluence. That's a man that wants to be 100% sure about the money that he's putting into the contract that he chose. Another question that I have for you, Fish, is when you're in a contract, right? Have you ever found yourself in a winning position and not looking at the contract itself for a minute and just looking at the candles going in your favor and just, feeling that sense of like satisfaction of the fact that the candles are going where they need to go and that every single second the candle drops lower or higher, you know that you're making money from those ticks?
Yes. So I actually did that this week with you guys. There was a trade that I was in. I think it was I think it was Wednesday. There was a trade that I was in, or maybe it was Tuesday. I don't know. There was a trade that I was in, and I knew the level at which I got in. It was a call, and so I knew where I got in, and I just knew where I had to watch it. So I put my phone down, and I was just watching the chart. And as long as I'm watching the chart and I know where my entry was, then I know I don't really need to be watching my phone because I already know that I'm in the money.
Exactly. Boom. I love that. That type of mentality is a convictions mentality, and that's how you start with it. I personally have realized that most of my good trades, I've done a lot of journaling, and my best trades have come from when I take a high conviction trade and literally take the contract and then set my phone down. And you guys see how this thing looks green and red? I just focus on how much deeper into the green it goes, right? And once I feel like I'm deep enough into the green, that's when I pick my phone up, go see, oh shit, 50%. So, you know what I mean? That is the psychological aspect of conviction that I need you guys to start to practice. I promise you guys. That is going to change your mind. It's going to change the way you look at things. It's going to help you respect the price action, the TA over the amount of money and dollars that's being, played with, so to speak, with your contract. Because when you're looking at the contract, it goes up, it goes down. You see fake outs here, you see fake outs there, but not looking at the contract and actually just looking at the fake out candle and watching it continue its course right after, knowing that you're still in the contract because. If you were looking at the phone, you're gonna see -40 for like 2 seconds, and then you're gonna get scared, and you're gonna sell, and then boom, the contract continues going where it's supposed to go. That's a lot of people's problems. That was my problem. I'm not gonna lie to you guys. Sometimes I'm holding my phone. I see myself lose a certain amount of money that hurts me a little bit for a split second, and that split second fucks with me. And that split second I'm out. I'm like, yeah, man, fuck that shit. And now boom. I look at my chart and now I see my play going exactly in the favor that I wanted it to go. So then I sit there like shit. I should have listened to my TA. Shoulda, woulda, coulda, right? That's the big three in the market. Shoulda, woulda, coulda, right? So fuck that. Let's actually apply what we know, right? Because I'm literally showing it here to you guys that it works, that it makes sense, it has fundamentals, it has technicals to it, it has logic to it. Let's apply it. Let's leave it in God's hands, honestly, and just, do what we need to do. Our part is to identify the confluences, put them together, take the trade, execute. The rest of it is up to the market. You know what I mean? So same here. I'm guilty of the same. Take whatever profit and sell. Whereas I could have got more looking at the chart and monitor. Exactly. And then that's happened a lot to me. I'm going to explore how to trade the chart with contracts. We'll let you guys know if I find anything. Thanks, Chad. I do appreciate that, brother. If you find it, let me know. Ant said, "What risk to reward do you look for?" I'm gonna be honest with you guys. Risk to reward when it comes to that, I just try to find the best trades. The best setups is what I try to take. That's all that really matters to me. You know what I mean? If the setup is good, taking the trade. If setup not good, try not to take the trade. But we try to keep our risk to reward like 1-2. You know what I mean? Nothing too crazy. It depends on the chop. If the chop is too crazy, fish, right? We be in a trade like sometimes more like 30 minutes to an hour max. Sometimes if there's too much chop, I try not to keep
Well,
us in the play for that long.
you do a really good job of that. But I try to make sure that I mostly buy one or two DTEs, so that way if I need to hold it, I can. You know, but
Exactly. That's
yeah,
why I
we're
always promote 1 to 2 0 to 2 DTE as well. I don't promote 0 DTE ever because the theta,
because
especially around this time.
right. That's what I was about to say. Is what I've noticed lately is that the market makers have really been chopping it up or grinding it up or grinding it down. You know what I mean? And so it's taking a while for trades to play out. And the reason they're doing that is to eat the theta away on the contracts and kill all the zero DTE contracts.
Yes, sir. And that's exactly what it is, man. It's all a
That's
market
also
maker tactic.
that's also why you try to point out the theta to people when you're picking out the contracts. You point out to them the delta and the theta, and you explain why you're going a couple days out.
Yep. Exactly, bro. Point
You know,
less than point one theta is what I always try to look for you guys. That theta is one, not good. If it's point 90, not too good. Point 80, point 70, looking better. You know what I mean? 1 point theta, bad. Who was it? Yeah, since I can only trade 3 times, do longer contracts make less profit? Good question. So if you get longer dated contracts, if they're in the money, you're still gonna make the good, the amount of profit that you would make off the momentum if it were 0 DT. In my opinion, I'm not 100% sure, but that's what I've seen, right? But if you're in a zero
correct.
DTE and you're just, I'm right, right, Fish?
Yeah, you're correct. You'll
Cool.
end up making money. So like I buy close to the money. The contracts are a little more expensive, but I end up making money on the contracts. When you do zero DTE, you don't have time to wait for that grind. That's the problem with it.
Exactly. What's close to the money again? Close to the money is basically when, let's say, for example, we're betting on SPY, shooting to right now it's at 526. We're betting on SPY to shoot at 530, right? But we're picking up calls for 527, right? That's close to the money, meaning we're close to the actual price that SPY is trading at. You know what I mean? In the money is if you're picking up a contract that's within the price that SPY's trading at. If SPY's trading at 526, but you pick up 525 call or 524 call, expecting for a 530 target, your delta is probably going to be above 1 point, not 1 point. It's probably going to be above point 0.5, probably a point 0.6, and at that point you're making like 60 $70 a move, a dollar, right? And that's when you really start to get the your bang for your buck. But you're paying more premium because you're in the money, right? The more in the money, the more the premium, the more you're paying, but the more money you're gonna make. That's how that works. And then out of the money is when you get a call. For example, let's say SPY's at 526. Now you're grabbing a call. You're expecting it to go to 530. You're grabbing a call for 530 or 531. That's out of the money. You know what I mean? And you're not gonna make as much money from that because once you're in the money, you're gonna be hitting your target price. So that's not too much money. You know what I mean? If you have a certain target in mind, it's best to take a contract near that level, near the level that SPY is trading at, or within the level that SPY is trading at. Never buy zero DT if movement is going to happen greater than 20 minutes. Data catches up every 5 minutes and accelerates on opposite direction. Yes, sir. What Chad is saying is very true. Very, very true. CODTs are the worst in terms of data, right? Yes, and they can be highly volatile, so gains can be high too. Seen from what Maddie does. Yes, exactly. The gains can be high. The volatility is there. You know what I mean? But the risk to reward, that's always what you need to ask yourself. The risk to reward, the ratio with zero DCs for risk to reward is very much up there. You know what I mean? Yes, you can make a lot of money, but yes, you can lose it all. You know? So zero
So
DT is good for scalping. What's up, Fish?
That's what I was gonna say. With zero DTE, it's pretty much just it's really meant for scalping, and also you have to make sure that you have the right entry, and also where your exit is, both for a profit and a loss.
Yes, sir. Oh man, we got royalty in here. What's up, man? ZODT, solid for scalping on momentum. Yup, Mirage, exactly what Vision said right now, too. Best to sell for ZODT instead of buying. Exactly. A lot of gamblers, man. That's why people say ZODT is the gamblers. It's the gamblers' version of of the stock market. ZODT, the ZODT, that ZODT. Anything that can make anybody fast money in a short amount of time, I say personally as a trader, avoid it. Why? Because there's gonna be gamblers behind that. You don't want to be behind something that has gamblers. You know what I mean? Unless you're a good scalper, obviously, do your thing. But I'm conservative. You feel me? It's different. I'm training to spy with y'all every day next week. Hey, see, man, can't wait. Wonderful, wonderful. Okay, so how do we feel about our fibs? How do we feel about our VWAPs? How do we feel?
Trying to make it. I got to interrupt you real quick, bro.
Talk to me, brother.
Why don't you go ahead and read those comments real quick? Those newest comments. We're gonna have somebody with us next week,
My boy Royalty Trade.
bruh.
Oh man, nah, it's over. We're gonna have the A team, bro. A team, A team. Everybody drop some A team just in the chat. It's over.
Oh
We got royalty,
wow.
bro.
Okay.
Royalty's Mr.
Okay.
T. Royalty's Mr. T.
Okay. All right.
Yo, let's
Damn.
go.
Is it Mirage? I know I can count on you. Is it Monday
Right?
yet? Is it Monday yet? Damn.
Should be. Fuck at this point. Jesus, man. Long ass fucking week. We're the 18. I love you guys, man. You guys are great. Oh shit. No, man. Royalty joining us next week. That's gonna be a blessing, bro. Having our boy in voice chat. That's the goat right there.
It's gonna be dope, man. I'm excited.
See what else we got here. Fibs. All right. So see how we going on here. Support resistance flip. Little quick lesson on support resistance, all right? And how to draw lines, little trend lines and little things like that, all right? It's gonna be a quick little lesson, all right? This is the last little lesson I'm gonna run through, okay? I've got the package. Oh nah, Chad. He's funny as all right. So I'm gonna teach you guys how to basically draw some levels. We're gonna use the 15-minute or the 65. I like the 65. 65 has good structure. We're gonna use the 65-minute, right, guys? So boom. This is how you basically draw support and resistance levels. We're gonna I'm gonna show you all the support and resistance levels I see in all of this. Right? The first one I see, I'm gonna start with over here. Okay. You start here and you climb up through here. Right? Boom. This level of support is for this run right here. Right? It dipped below and it dipped back above, but then it became weak. So we knew that the level was gonna end up becoming weak once we started breaking around here. So this level is a trend line of support that's starting to get weak that ended up breaking down, right? Now, for resistance, trend line down, you see all these candles with holding resistance off these levels, resistance, resistance, resistance. Next level got tested for resistance, broke out. So you guys getting a good visual of how basically we just line up these levels. I just checked the calendar. I'll be on voice May 1st. May 4th, I believe, is when I go on vacation. What's up, my boy? My boy deserves that vacation for real, man. He's been locked in. So just basically, you kind of just look at the levels where candles are touching the most. Like right here. Candles are tapping a level. Here's a good way to check it out. Boom. Right here you see a tap. One, two, three. Momentum is strong. Four. And you're starting to see how it gets weak here. For ZODT spy plays, what time frame do we look at to drop these lines? So I believe if you're on the 5 minute, you know what I mean? We're on the 5 minute. It's always good to have these trend lines, played out. You always want to have them around. For example, it's good to, track the momentum with the trend lines. This right here, you can see how strong it was. You see how it got weak. And then, for example, this right here, you can see how strong it was before it got weak. Right here too, you guys. If you just focus on the level, if you focus on the wicks, a lot of people do it differently. I focus on the wicks, sometimes the body of the candles, but wicks do right. Right here, for example, this is a good level of support. About right there. One, two, three, four. Four levels of support, right? So right here as well, you guys kind of see here a little bit. Da, da, da. One, two, three. This also is another level of resistance right here. So these are multiple levels of resistance in one. You guys seeing what I'm seeing basically? You always have to connect the bottom of the wicks, walk it throughout. You know what I mean? Just literally do this on your chart all day. Like while you're bored, bro, just literally grab your fucking lines, just go, all right, bottom of the wick, look at that, cool. And that's how I get my wedges, you guys. I be exploring like that, a whole lot of that. Yeah, that's what I'm saying, Chad. This is very subjective, to be honest with you. But a lot of people really don't know how to draw trend lines. It's really good to figure out how to do that as well. All right, perfect. All right, any questions? Anybody about anything? Look at Ford's chart. They're covered in lines. You know what I mean? Ford is a great example of that. We have any questions about anything at all? Any type of indicators, any type of confluences? I ran over a good couple confluences, some fibs, some MAs. We ran over some VWAP, different levels you could use the VWAP in. Screen time alone is really the best way to get better at reading charts. Yeah, I'm not gonna lie. You guys, if you guys see me up at 3 in the fucking morning, posting on after hour. I have fish to vouch for me. Papa John V's here as well. You know what I mean? I'd be up late as fuck, man.
100%. I was wondering the other night. I was like, when does this kid sleep? Like, Jesus, man. Like, bro, it's like 4 a.m. and you're sitting up here like, all right, here's the breakdown, blah, blah, blah. I'm like, dude, like the market opens. I'm gonna need you like fresh and like energized, bro. And I even mentioned it to you, and you were like, oh yeah, no, 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 it's all good. Like, I got a couple hours. Like,
What's good?
wow, you're like, bro, dedication, man.
And that's really all it comes down to, Fish. Thank you, bro. I really do appreciate it, and I really want to like put that obsession into your guys' hearts because I know you all could become amazing traders. I know you all have the ability and the capability to become really, really good traders with discipline, rules, and all that good stuff. It just takes a matter of obsessive consistency, is what I like to call it. You know what I mean? I like Fish. I can imagine you, bro. You have a lot of notifications on. I imagine X. You have notifications. You be on after hours.
Bro, I
Anything
don't
that has to do with the market.
I don't even have X or Truth Social, man. But I was thinking the other day, like I'm toying with it. I might have to download Truth Social just so that I can stay up on like the latest of the news, you know what I mean, and how it might affect the market. Because getting access to a Truth Social post before it hits the news, I mean, that could make a big difference in gains or loss.
Exactly.
You know what I mean? But I mean,
Huge,
yeah, no,
man.
you're right, man. Dude, I'm like one of the things that I'm dedicated to is staying up on the news,
Hmm.
and trying to think about like how are different things that are happening and throughout the different parts of our country, how is that going to affect the market?
That's what's up, bro. Damn. Fucks with that, bro. And that's exactly what I'm talking about. I've actually been uploading this to my YouTube, little bro. So our live streams?
Oh, Mirage, thank you, bro. That's a great
Same here,
idea.
trying to gotta log off. I truly appreciate your time. Thanks. Oh yeah, it seems like a couple of us are gonna log off. I was gonna run down a couple psychology tips, but if you guys
I'm
want to
here
say that
for
for
it.
another day, we could do that. How do we feel about it?
I'm here for the psychology. Rock says he wants to keep going.
All right, cool. I got a list of
Understood.
10 things that I want to run through, and I want to see what you guys, what's your weaknesses and what's really like, what's your stronghold, So let's see what's going on here. All right. First one, fear of missing out. All right. Facing breakouts without confirmation. This ties into VWAP, fib breaks that look strong, but trap late entries, right? We were just going over VWAP, we were just going over fibs and not using them solely on their own. Who here has a problem with fear of missing out? Chad, no worries, Chad. I'm here for all of you guys. Thank you.
I got a problem with FOMO.
I have FOMO. Yeah, trust me, who doesn't, man? It's hard. When you see an opportunity right in front of your face to make a lot of money and you see a chance to get it, but then you just know that there's a chance that it's going to get bought back down, that fear is what kicks in immediately. And that right there is the market maker's whole plan to scare you, to make you think you're going to miss out, right? Why do you guys think I always like to stress out? Break and retest, break and retest. Wait for this candle to close. Wait for the trend shift. Wait for the break of structure. Why do you think Fish has gotten to a point where now he just sees these giant green candles and he's like, wait, hold on. He used to FOMO,
Yeah,
but now
but
he's
now I
like,
know.
mm-mm.
Now I know enough to take in a few different things into account. Look at RSI, look at your moving averages, look at how the price action has been. Why is it acting so crazy all of a sudden? What's causing this?
Exactly.
You know,
And the thing
not
about it is that FOMO is sorry, Fish, what were you saying?
I was just saying, not just reacting and going, oh my god, I gotta panic,
Yeah,
X. It's why do I need to panic X? You know what I mean?
exactly. And it all comes down to that, the why. You know what I mean? What's moving this? So is the news gonna last? Is this relative news? Are we breaking levels that are worth breaking? Are we gonna hold support? Is this candle the only candle that's gonna, you know what I mean? Because you have to remember, sometimes these FOMO candles happen in one candle, right? And we're on short time frames where these candles don't look the same on the 15, don't look the same on the hourly, they don't look the same on the 30 minutes. So you all need to keep in mind that what's happening on the 5 is just the beginning to something that could have been a fake out or the beginning to something that could be the start to a move that you might be able to still make money from, right? So what I'm trying to say here is how to cure FOMO. Always repeat to yourself, there's always another chance. There's always another entry, right? Rock said, what does a market maker look like? Very funny you mentioned that. Market makers are people that we cannot beat. These are machines. These are high frequency arbitrage trading machines that place trades, sell them before we even see the change in price. That's the amount of upper hand that these FOMO candles have on us, retail traders, right? So just take that into account and take it into perspective and keep in mind the fact that we can't beat that, right? So why FOMO into a candle that an arbitrage machine could just sell off in the next 5 seconds? You know what I'm saying?
And they could
So
also be playing on the dark pool as well,
yes, sir. Exactly what I'm saying,
which
bro. These
we're
people
we're
pay
not allowed to
millions.
play on.
Hell no. People pay millions and millions of dollars to play in the dark pool. They pay millions and millions of dollars to have their internet or their connection, their frequency connections next to these next to Wall Street, next to these brokers, next to all these places where their orders are gonna get filled before we even see the change in price. You know what I'm saying? So why have FOMO when everything is mechanically strategically structured, right? Think like a machine for a second, you know? Would a machine FOMO? It won't. A machine would know that there's gonna be another chance, another opportunity. You know what I mean? And I'm not saying, we're all robots here, but think, we've all had chats with ChatGPT. We've all talked to ChatGPT before. How does AI has no emotion? You know what I'm saying? So if you really tie your emotion to money, then you'll have fear of missing out. Then you'll have fear of what could have been, right?
I actually
Detach the heart to the money and you'll go far. What's up, Fish?
I was just gonna say I actually just made a post on After Hour about removing FOMO from trading.
I saw
Like
that. Yes, sir.
I've found in the past that when I remove FOMO from trade, or when I remove emotion from trading, and I trade solely based on my trading plan, I've found that I'm much more profitable.
Exactly, fresh. Exactly. Literally detach your emotions from it, detach it from the money, detach it from anything, and just let the TA do his thing, let the conviction do his thing. Your plan, trade your plan at your emotions. Exactly what I'm talking about, fish. Good stuff, man.
Thank you, bro.
FOMO is just another word for YOLO. Beautiful. Chad, I'm about to put that on the shirt. Everybody, what Chad said, bro.
Wow,
That's literally
bro.
like the best thing ever,
That
bro. Like
that is
FOMO is
absolute.
another word for YOLO. Telling you guys, the more you realize it, the more you wake up to it, the more you're like not wanting to do it. You know what I mean? And you sit on your hands. I sat next to a HFT quantitative trader for Citadel Securities on a flight back to Miami. Jesus Christ. And we talked the whole 3 hour flight. He sent me all his Stanford class notes and a bunch of books that will blow your mind. Retrading at the speed of light. Shit will blow your mind. They are trading in nanoseconds. You see? That's what the fuck we're against. So what the fuck is the point of fucking FOMOing, man? When they already caught that move, you light years away. You know? It's good to wait. Thanks, man. I'm gonna definitely add that to my list of reads. I do need a new book to catch up with. But yeah, man. So how do we feel about this FOMO topic, guys? FOMO is just another word for YOLO. Don't forget that, right? This brings me to my next topic: patience and discipline. All right, the big P and the big D. All right, patience and discipline. P and D. Always remember that. P and D. P and D. Big P and D. Right. So boom. When we are in the market and the contracts are moving in price and our watch list is moving, right? And we're seeing how much profit we could have made, right? That right there, it makes your legs start to move up and down. It makes you start to tap on the desk a little bit, right? It makes you kind of think, damn, am I waiting too long? Am I doing things right? Should I get in right now? Those kind of things right there, they have a lot to do with patience and discipline. If you have a plan, if you have a notepad, if you have things written down telling you when to get into a trade, what to look for, discipline plays part when you have a checklist of things that you know you can't get into a trade until you have enough things checked out, right? That's why I tell people, that's why I personally have a checklist. I recommend you guys make a checklist as well of a bunch of confluences that you like, that you prefer. Some of them that we, talked about today, others that are talked about in the kingdom as well. Make a list, right? Make a list of those confluences, make a list of the ones that you know work the best together, right? And your discipline kicks in once you realize that you know that you're not supposed to take a trade until things are the way they're supposed to be, right? Because we're trading in a market of probability, not certainty, right? So if we're working in a probability market, what's the best thing to do? Find the best way to make the probabilities be in our favor, right? And how can we do that? Confluences. Can you share your checklist as a screenshot?
Mhm.
Can you send us a photo of your checklist so we can see what you look at every day? I got you guys. Just don't make fun of my handwriting. So these are 9 confluences that I check every day. I have a bunch of, I hope you know, I have sheets just filled with these
你跑下
confluences.
去啊！你刚跑下去啊！你身上都是下面的味
All
道，知
right.
道吗？真的是。
Well, who's hot micing? So good. All right. So boom, that's my checklist that you guys, boom, see right there. Okay. So that's what I look at. And when I at least get 3 to 5 of them, sometimes 9, I feel really good about the trade that I'm in. You guys know what I'm talking about? That's what it comes down to. My discipline makes me sit down, my discipline makes me wait, and my discipline makes me patient, right? Those go hand in hand, P and D, right? Number 3 is SR flips, support resistance flips. The trend lines that I just showed you, whenever the support breaks and it breaks down, that means we're flipping resistance, right? Moving averages can also act as support resistance flips as well. Number 9 is FEGs, fair value gaps. Number 7 is break a structure, right? Break a structure is basically this, Chad. A break above this previous structure right here shows bullish momentum, right? Anybody still watching my chart right here? I hope it's still up. But yeah, this is basically a break of structure right here. Any break
Yeah,
from the
you're good. You're good.
previous,
in the start.
structure that was there. Perfect. So yeah, it's basically a break of structure. For example, this right here is a break of structure. You guys see how this was the previous low right here. That's why I tell you guys, oh, let's wait for a break below this candle. That's normally like a mini break of structure within the candles, but normally structure would be something like this. So break below this previous structure would be candlesticks just trading below this level. So if we continue playing this out, it might continue dumping a little bit more. Gapped up. There you go. But it still might lean bearish. At the end of the day, that's really what break of structure comes down to. That's one of the confluences I also look for. Bro, how to use the fib? I know the first point at the bottom. Where I put the second point at when I'm on the market time. So, like I had mentioned, for the Fibonacci's, right? In an uptrend, you would want to mark it. Let's say, for example, select bars, come back here. All right. So in this sense, you would put the Fibonacci from the most recent low, which would be right here, right? And once you see the price start rejecting, which is around here, you see I was rejecting here and now it's coming down. That's when you put the fibs, and now you're going to see where the level of support is, right? So from the low to the high, and then you're going to see where there's support. Now you're seeing 38.2% support, right? Market's closed. Once that market opens, you're going to see 50% just touched. There's the support. Now you're seeing a jump, possible breakout, support. There you go. There you go. It's choppy, but it played out. It was a 50% retracement, but it played out all the way to 563. All right. So boom. Patience, discipline, that's basically what that comes into. You guys, not hard, right? Chad said how to deal with losses. Boom. That was number 3 for me too. I like that, Chad. So going on to number 3, the trap game. Emotional manipulation in the market, how smart money uses these fake outs and how they use the indicators that we use, and how we can deal with the losses, right? That we take in the market. First of all, put yourself in a situation you probably relived it thousands of times. You're in a trade, things are going in your favor. You have a specific target price in your head, and you're a little over leveraged, right? Now, boom, trader starts going against you. Tweets are coming out, news is dropping, everything is going against you, things are failing, and now you're realizing that the charts aren't in your favor, and now you're in a losing position, right? Let's say you didn't have enough time to get out of the position, right? Because of the reaction of the market. Now you're out of the position and you basically lost more than half of it, right? How do you deal with that? Right? What do you do? What should what emotions should you feel so you can feel like, continuing? Me personally, I've lost thousands of dollars in the market, like some of you, like most of you. You know what I mean? And the way that I've dealt with it was the fact that I know that one day, with the effort that I'm putting into the market and the amount of time that I'm spending in the market, all the money that I've lost will be paid back to me. And I do know that losing hurts, so I under leverage, right? Instead of working with thousands and thousands of dollars, precise I try to use precise amounts of money, like 500, 300, 400, and see how far I can take those levels. I try to experiment with those amounts. I try to find, different edges to my strategy. I try to refine within my strategy. You know what I mean? I go one contract at a time. Let me be honest with you guys. I've only ever bought multiple contracts literally when I was doing swing trading. I've never really bought 2, 3 contracts at a time. I only do that every once in a while when I'm on stream with you guys and we're in a really good play. I'll buy 2 contracts, but that's the most I'll do. I'll take a play in my Roth and then I'll take a play in my regular brokerage. But more than that, you guys know I don't really do that. And I don't call out multiple contracts either. So if you're taking a lot of losses and it's been hard to deal with, the best thing to do is cut back on what you've been doing. Start from ground zero, clear the whiteboard and only put down what you know matters. Only put down what you know you need to start with, right? Start with a set amount, have a target for that set amount, have rules for that set amount. Treat that set amount like the only capital that you have left, right? Even though you have more capital, right? Let's say you have thousands and thousands of dollars in your brokerage. Set aside 200, 300 bucks, trade out of the money calls or puts until you're able to trade in the money calls or puts. right? And slowly refine your edge. I promise you, the more time you spend in the market, the more you'll be able to deal with losses and the more you'll actually not have to deal with them anymore, if you know what I mean. Because the more you have to go through it, eventually there is light at the end of the tunnel. You know what I mean? It's just in a trader's journey, bro. Let's be real. Who has the mentality and the strength to really go through what traders go through every day? You know what I mean? People sleep on this, but a lot of people are losing sleep. A lot of people are struggling. A lot of people think that us traders are struggling in this market. We are, but we're not. You know what I mean? We know how to buy puts. We know how to be flexible. So we know how to get around, right? It's just little things, little decisions. You know what I mean? And these little decisions bite us the most because we're either over leveraged, like Mirage said, or we don't have enough conviction. You know what I mean? So this is just a test. Yes, every single little loss that you've ever taken in the market is a test to prove your strength. It's always going to be like that because this is this career path, this way to make money. It's not, this is an actual way. Like you're learning a high income job. This is a high income opportunity, and it's only given to those that are able to sustain themselves through the hardships of it. Why? Because the stock market is numbers, the stock market is money. And for you to not feel that emotional attachment to that money, first of all, start with a small amount, detach yourself from that small amount. Don't care about losing it. Don't care about, how much you make from it. That's all that matters. You know what I mean? What matters is where you can take that money using your strategy and following your rules. You know what I mean, Chad? So if you literally sit down, right, spend a good 3, 4 hours aftermarket a day or 2 hours, not even, bro. Even at nighttime, like 1 hour or 2 hours, bro. Spend 30 minutes back testing, spend another 30 minutes writing down some rules, and do that every single day. And I promise you, bro, you're gonna find the edge. And once you find that edge, you're gonna be able to, figure out what you need to do and how you can keep doing it. Let me tell you something, guys. Traders don't do different things every day. Traders don't get on the market and they don't do different strategies every day. They don't switch around and try, oh, let me try this strategy today. Oh, let me try this strategy today. No. The successful trader, and I'm saying this because I'm not saying that I'm the most successful trader, but I'm getting there. And I'm starting to realize what it is that you need to be a successful trader. And that's a system. If you have a system that works, if you have rules that work, and if you're able to apply yourself to that system every day, you're doing something right. And on top of that, if you take a loss by applying your system, it doesn't matter. That's a good loss, right? You have to be able to differentiate between good losses and bad losses. A bad loss is a loss that you take off FOMO, a loss that you took off of breaking your rules, a loss that you took off of a missed opportunity, a loss that you took off of revenge trading. Those losses are the losses that you have to kick yourself in the back for. But the losses that you take from following your rules and following your system and following everything that you were taught and that that shouldn't make you lose any hope. That should just show you that you can still refine your strategy and you can still find a way to make it better. Man, I am. Wrote down everything you just said now. I'm going to read this before every trade session. Yes, brother. You got this, bro. And yeah, Blaze amazing. They get repetitive, brother. Trust me, they do. But you have to figure out what you're doing that makes it repetitive. What decisions you're making, what mental state you're in that makes losing repetitive. You know what I mean? Trading isn't always about constantly winning. And trading is best when you're not even thinking about winning or losing. You're okay with any outcome, but you have to always be applying your rules. If you're applying your system and you're applying your rules and you're applying your strategy, the outcome shouldn't matter. But what should matter is that you're doing what you're supposed to be doing. Yeah, I don't know how to TPS for the God. That's why. It bleeds amazing. You got to learn to always think in your head, guys. This brings me to my next part of the psychology level. Take what the market gives you. All right. We touched upon this before, but let's touch upon this even more deeper now. Take what the market gives you means you're trading against high frequency traders, you're trading against Wall Street, you're trading against institutions, you're trading against banks. You're trading against people that have no business giving you any fucking dollar for anything. So if you have the opportunity to actually outplay the market and take some money from the market for free, take it. Because that opportunity doesn't come every day. There's people that literally struggle every day to manage to make even a dollar in the market. And we're here. We have some members that have been here that have been on streaks every day, making thousands and thousands of dollars, $500 today, $200 the next day, making enough money to actually sustain themselves, like if they were working a full-time job. And they would make this money in a couple minutes to hours, which is the most beautiful part about it. Exactly, bro. That's what I'm saying. We in and out in the market, and that's all it comes down to at the end of the day, you guys. You know, you're in there to take what you can, and you leave. Right? Hell yeah. It's all about taking what we can. You know what I mean, Blaze Amazing? And can I tell you something? You have to completely kill, and to everybody here, you have to all learn to kill the feeling and the mentality of, damn, I left so much money on the table, right? That damn, I left so much money on the table, that shit will fuck you up. I'm not even gonna lie. Because if you sit on what could have been, if you sit on the trade that you paper handed and how much money you could have made from it, that shit's gonna fuck you up. Because at the end of the day, that's the market's way of getting you to revenge trade. That's the market's way of getting you to FOMO. That's the market's way of getting you to break out of your rules, break out of your consistent strategy, break out of what you put down to religiously follow. That's what the market's gonna do to break you. And make sure that the next time you get into a trade, it's a loser. Why? Because you're going to be doing something outside of what you normally do. You guys get me? Are we all on the same page here? Thumbs up if this is helping you guys out. Full therapist mode right now. Love you guys, man. We're going crazy. Thank you. Thank you. Profit is profit, no matter how big. Yep. Paper handed till you make it. Compounded consistent gains. This is what I tell you guys. Compounded consistent gains. That's the goal. Mic drop. No crying. All right. So recency bias. We just talked about that. Okay, cool. So another thing I wanted to talk about is recency bias here, right? Recency bias is basically the last trade that you took. How Chad just mentioned, how do you recover from losses? If the last trade you took was bad, you're probably going to be scared to take another trade, right? Common sense. Don't let that happen. Don't let the fear of messing up again stop you from making another trade, because the next trade could be the trade that was supposed to be the trade that you should have taken. You know what I mean? Don't ever let that stop you. Don't ever let it be an obstacle. Keep going, keep trading. Don't stop. Just follow your rules. Stay consistent. Don't break. Okay? The strongest are the fittest, and the fittest will survive. That's what the market's all about. I dropped the Stanford HFT trader stuff in the trading chat if anyone is interested. I read the first book and realized, thanks, bro. I definitely appreciate that. We're going to definitely check that out, Devin. Thank you, man. So always remember that, you guys. Forget the last trade, on to the next. All right? Last trade gone, on to the next. Remember that. Recency bias, keep that in check. Now, emotional management. Recognizing when you're revenge trading or getting overconfident. A lot of us are going to be making a lot of money a couple days. A lot of us are going to be, having good days. And there might be some days where we're going to be actually consistently making gains. And you might be confident. You might feel like, hey, we're getting good here, bro. The strategy is working. You know what? Let me start taking entries earlier. Let me start doing this. Let me start doing that. The market is gonna put you in a position where you feel like you're getting really good at trading. It's gonna make you feel like your strategy is making you so much money. So it's gonna make you feel like you can be more flexible with your entries. Be a little less conservative. Be a little less, convictious. So so when the market does that, it puts you in a state of like, all right. um when you keep yourself in check from that, you recognize that if you're too overconfident, you're going to do something out of the normal, and it's going to take you out of what you're supposed to be doing, and it's going to, you're going to end up doing something that's going to go against you fast. Sometimes you just need to walk away trying to make it. I think that's the point. Yeah, literally, exactly what it is. Sometimes no revenge trading, walk away. Overconfident, walk away. what Mirage is saying, just sometimes when the day's too good, just learn to walk away. You know what I mean? You made fucking 4 bands in one day, you're done. Don't keep going. You know what I mean? You lost 2 bands in one day, you're done. Don't try to get it back. You guys get that? We're on the same page about that. No revenge trading and no overconfidence trading. Because the same way you can revenge trade, it's the same way you can overconfidence trade. So don't get overconfident. Don't over leverage. Don't do something out of the norm that you would normally do. Same way that you could, trade off of revenge, and then you would do something out of the norm and try to steal money from the market. It'll work the first couple times, but when it doesn't work, it'll hurt the most. Yep, I definitely got overconfident. Yeah, it happens, man. Trust me. It's all good, Chad. We learn from it. Market is designed to make real retailers fear putting in the market. Yep. It's important to check fear and greed index. Yes, it is, man. Fear has been fearful, very fearful recently. All right. So next, identity and self-worth tied to PNL. So, like I said, you guys start detaching from your wins and losses and start focusing on execution. All right. Don't focus on, oh, how many wins I've made this week, or how many losses I've made this week, or how much money I could have made, or how much money I could have lost. Fuck all that shit. What matters to you guys is literally staying afloat and executing. Execute, 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 execute. Follow rules, making sure that you do what you got to do. That's all that matters. My problem is doubling down on the losing trade and ending up fucking myself more. If the trade is a loser, you cut it. You got to learn to cut losers and let winners run. Don't ever double down. Doubling down, some people do it, but I don't recommend it. I'm gonna be honest with you. It's okay. It's good if you had a bad entry and you want to get a better, you want to catch up on that. That's fine. That's a good strategy to, get back some money that you lost if you're going in the right direction. But I wouldn't personally recommend it. You know what I mean? Whatever you put in the market already, leave it there. And whatever you have left, leave it for the next trade. You know what I mean? It's good to wait for different setups and not putting all your money in one bag. Don't put all your eggs in one basket. I know you guys have heard that saying before. Definitely don't do that. So, uh, be able to detach yourself from the wins and the losses, and always try to focus on executing in the market. That's really what matters. Execution is everything. The reason for me to not cut a trade is that I don't know, will it bounce back in the next candle or in the next 5 minutes. And that's why you always have to focus on the trend. Is the overall trend strong? You know what I mean? Are the MAs bullish? You know what I mean? Well, you have to ask yourself all these questions. Are the MAs leaning bearish? Do we break above the orb? Are we below the orb? Is the VWAP bearish? Is the VWAP bullish? Etc. Once you ask yourself all these questions and things are leaning in one direction and they're more in one place than the other, it should give you more conviction to hold the trade, even if they're trying to fake you out because you have a good entry, and you can continue holding it for the proper profits. And the way that I look for take profit levels, I look for recent highs, right? So let's say we're reversing, you guys, right? And we're reversing in a V formation, or let's say from a double bottom or an inverse. I always try to target, either with forward inevitable targets, but me personally, I try to target the most recent high, right? From the previous level. So whatever downtrend that we've been recently in, if we're reversing off of it, I'm gonna go see where we dropped off that cliff, and wherever we dropped off that cliff, that's the level I'm gonna start looking at. Right, depending on how strong the trade is and the trend. Yeah, doubling down creates bad habits, especially if you're in a trade where the trend is against you. It can get emotional and make you go against your rules. Exactly what Royalty just said. It's 100%. So try not to double down, you guys. All right. Number 9, market noise versus market narrative. Avoid overthinking every candle. This is for you, Heisey. Avoid overthinking every candle. Okay. Finding structure is important. Help use the fibs, use the VWAP, and use the support resistance that I showed you guys to help you filter out the noise. If there is support, if the VWAP is strong, if the Fibonacci already retraced and it already found support, let's say at the 61.8 level, and now we're just ripping up, that should be enough to let you know that your bias is good, your trade is green, and you shouldn't just be there stuck looking at the chart like if you don't know what's going on. You know what I mean? Those things should help you, you know, help you put the market narrative over the market noise. The market noise meaning news, the things you hear on CNBC, the tweets, all that extra shit. It helps you put that over the narrative, right? You want to put the narrative over the noise, right? Me and Royalty, we've talked a lot about news trading. People are constantly trading off news and they're getting faked out. People constantly disregard TA. They disregard a lot of things that are in the chart that the chart are hinting at, higher time frames, etc., technical analysis, etc. And they'd rather put news over these things. And sometimes the bigger picture speaks thousands of words. You know what I mean? A chart speaks way more words than a headline, right? And once you start realizing this, you're gonna realize that the news, the headlines, the CNBC, all that good stuff, it's just a tactic. It's just a way to make the chart move in the favor of the market makers. For you as the trader to be able to identify the chart, the pattern, and find out what's gonna happen, and for you to be able to execute the way you need to. Right? Are we all on the same page about that? How do we feel about market noise versus market narrative? Shut the noise out. Noise to justify price action. Yes, sir. Yeah, there you go. There you go, Fish. Good shit, Fish. That's what I'm talking about. All right. You guys ready for point number 10? Last and final point. All right. This is the last and final point of our market psychology lesson, and then we're good to go. You guys ready? Drum roll, please. Point number 10 is trading alone versus herd mentality. How groupthink and social media pressure affect decision making versus staying true to your own system. A lot of us are from after hour, right? A lot of people are after hour. They think like a herd. I'm not trying to come at certain traders. I'm not trying to come at the community or anything, but herd mentality can lead a lot of people down a very bad path. Okay? Learn to think as a lone trader. Learn to think as your own person. Learn to make your own decisions. Learn to make your own research. RX first bullshit. That's an example of herd mentality. A lot of people are seeing things about RX, see a nice little post about it with a bunch of fancy words, and they think that it's something that's going to change their life. Herd mentality, following the herd, not good. You know what I mean? So, what you guys have to always point out and be aware of is that if you have a system and you know how the market moves and you understand the market to a certain extent, you can on your own do your own thing, find your own research, and be able to make your own decision without following a group, without following a herd. You know what I mean? We're here together in the kingdom. We are not a group. We are not a herd. We are traders. We are a family. We are people that are trying to become better traders every day. Right? That's the big difference between us and everybody else. And after hour, that's the difference between our group and other groups. Not sure how other groups rock, but this is the way that we roll. You know what I mean? So when it comes to that, we try to really enforce you guys to have your own mentality, have your own conviction, have your own bias. You know what I mean? If one day I'm saying, hey, SPY's looking bullish, but one day you guys are doing your own TA and you guys are seeing that SPY's bearish, I'm not gonna go against you. And I don't want you to and I don't want you to follow with what I'm saying because of what you think. You know what I mean? I don't want you to be like, oh, I'm gonna follow trying to make it because I think trying to make it's always right. That's herd mentality. Don't do that. You know what I mean? You guys have to always have your own conviction as well and do your own research. It helps. Yep, I got herd mentality with RX. I was explaining it in the trading chat and Fish saved me. Nice. Have your own sell point. Yes, Fish, exactly. I give up on gambling now. I'm just trying to learn and make my money back. And you will. Fuck gambling, bro. You have a higher probability here. Trust me. The more you learn the market, the more you structure yourself into learning how things work and how the money moves and the way sentiment is and the way market psychology plays a big role in trying to make people like us fail. You'll be able to use all three against the market and, be on the right end of the stick. You know what I mean? Nice. So, all in all, kill that herd mentality. Not good. All right? Not good. Not good. Staying true to your own system is very important. I find at least one big player weak. And it's true. Royalty do. At least now I understand why Spy is chopping all the time. Yeah. Yeah, exactly. All right. Any questions, you guys? How we feeling about the herd mentality? You guys agree? Nice. A little bit of market psychology 101. Hopefully, we picked up some good stuff from this stream. Any questions, you guys? Yeah, I never look at the trading chat. I forget about it when you do a call out. It's funny because, yeah, when we're streaming, it's like, fuck the trading chat. Oh, you guys, good stuff. The stream is intense. Awesome. I feel so enlightened. I'm truly humbled. Thanks, Chad, man. Anytime, bro. I'm always here for you guys, man. Any questions? Last round, last round. Are we all good? Everybody on the same page? Thanks, Rock. I appreciate it, man. Oh man, I'm always gonna care, bro. You guys are my family. Make sure you guys are always good. You know, you guys support me, I support you guys, and we're always gonna be here. Would you do a session in the future for MACD and FEG? Oh, I would definitely do that. I would have to get Maddie in there, Joe. Hopefully, John could join us for them to break down the MACD perfectly the way they do, and I'll do my own little thing with the FPG and show you how that works, how to find them, and the best ones that there are to find. I'll definitely break that down to you guys, no problem. Maybe next Saturday. Yes, of course. I'm gonna try to make this an every week thing, okay, with you guys, hopefully, Good to have a little powwow before the market starts.
Trying to make
Kind
it.
of like regroup. What's up, Fish?
Ant had a question in the chat.
How do we use the foot? So, you go to the emoji right here. You gotta find the foot. Once you find the foot, you know what I mean? You
Just stomp it back down.
right? And you got to find the confluence. So here we have a bearish divergence, and here we have the foot, and then you stomp the price down. It's supposed. There you go. You see, beautiful, right? So there you go, the foot in
Crazy
action. There
shit.
you go.
I think that shit actually worked when y'all did that.
It did. It did. That's what made it so funny, man. That's what made it so funny.
Oh man.
We were all in puts too, man.
I
Oh, it was
couldn't do
great.
nothing
It
but
was such
laugh,
a
man.
beautiful thing.
Yo, Royalty was like, "There's no way I join, and I'm seeing a foot, a magnet, fucking, oh, fucking
He's like,
Bro,
what
hand."
are these
I
clowns
jumped,
doing over here?
man. I jumped in the chat, and that's the first thing I saw was like a foot stomping in the chat and on the screen,
Oh shit. Yo, I'm so happy you joined for that. I'm not gonna lie, bro. I know that was such a funny moment for you.
bro. And
Oh, and
it
thanks,
was
man.
even funnier because it worked,
Right? It was working. That's the craziest part. Is there an inverse foot to make it go up? You gotta hold
Yeah,
on.
the magnet.
Yeah, bro, the magnet, or you could just reverse this shit, right? Hold on, and then you know what I mean, real quick. Hello, it's what the expert analysts use. It's their secret trick. It's a confluence. Oh man, hey, bro. Anything you want to add to the chat, man? Anything you want to add about market psychology?
I mean, I think for the most part you covered it pretty in depth. I mean, if I can give any advice, it's pretty much just like for me personally, for the past month, I've turned off all my news notifications probably for the entire month, like half of March and for the entire month of April so far. I haven't gotten a single news notification because at this point we're hearing the same thing. We're hearing a 90-day pause, then you're hearing tariffs on 90-day pause, interest rates, blah blah blah, and
Yeah.
once you hear so much of that over and over, that's what causes the fear. I mean, they're programming you to at some point either get completely out the market altogether, which we've been seeing, or just stop putting money in the market altogether. So when they do finally decide to go back up to the upside, we've all missed the moves back up to the upside, and then
Hmm.
what happened? We FOMOing, trying to hop into a play. So I mean, the best thing right now is to just find a trading strategy that works for you. For a individual that you're comfortable with, and stick to it. The best traders aren't the ones that's 100% right. The best traders are the ones that take the same trades every time. Regardless of how you're feeling, regardless of what's going on in the news, if you see a certain confluence or a certain pattern or whatever it is, you taking that same setup
Hmm.
every time, every time, every time, and that's what builds consistency. That's what takes the emotion off of it and makes you more robotic in the market. It makes you not second guess, your ability to enter a trade because you're taking the same setup. You know that this setup works, and the market has to cycle through different algorithms. In order to throw you out. Sometimes MAs are gonna work. Sometimes RSIs are gonna work. Sometimes MACD is gonna work. You know,
Yep.
and other days it don't work. You wondering why different indicators are starting to conflict So you just have to continue to take the same setup over and over and over again until you know, literally you start critiquing yourself on, you know, the trading strategy that you use to start, you know, patching up the holes in your trade analysis. So that's just what I've learned over the years. Like I said, this year be my 7th year trading, and for the most part, I stick to one style of trading unless I need to adjust, you know, just to be able to feed out or dish out, you know, trades for you guys. But for the most part, every time I enter a trade, it's the same thing. So that way, I don't get thrown off too long on my rhythm. And that's what I tell you guys is the GANs one, the GAN fan. Yes, that's one of my favorites. Fibonacci is. I like MACD. If I use the RSI, I slow it down. I don't like it too volatile. I usually slow it down to like the 34, or maybe I think the default is like the 14. But I usually slow it down to like 34. Oh,
Fixed it. We're
but
good. You can keep
but
on road too.
But yeah, I usually slow down the RSI if I do use it to avoid getting like those low volume days to where it drops down to 30 or it goes up to 70, and then when it comes down, it shoots back up. When I slow it down, it gives you more of a truer reading, so that way you don't get that low volume move, and you get the RSI to move, and then the price action never goes anywhere. Um, about the
All right,
RSI.
Chad.
I was listening to Mirage, but I was telling him that normally when I use the RSI, if I'm going to use it, I slow it down. I think that the default setting is like 14, but I normally kick it up to like 34 sometimes, or maybe like 21, somewhere in there, just to get a truer read on it and avoid the false breakouts. But I think everything is just, you know, your conviction plays. I know we talked about, you know, risk management, and I've talked to some people and asked, you know, how do you get over, you know, scared or afraid, fearful to take place. You just have to take the same setup and then have an amount that you're willing to lose, that you're willing to let to go to zero, because you have that much conviction in your place. Now, of course, if you're playing with a daily profit limit, or you're working with a limited account, of course you don't want to let it go to zero. That's where you want to try to get as close as you can to entries and exits. That's where you want to understand the Greeks, like the delta and the theta, so you know whether it's something that's worth swinging, if it's something that you can hold throughout the day without getting chopped out by theta. Sometimes stop losses are needed, but for the most part, you only get better at conviction trades by taking trades that you're willing to let go to zero. And it's kind of like you have to build your own threshold. Everybody's threshold is different. You know, if I lose $300, $400 in a day, that's okay, because I've lost more than that, just over the years trying to learn how to hone my skills. But you know, for the most part, if your threshold is 50, if it's 100, depending on whatever it is that gets you out your comfort zone, then that's what you want to trade with. And we talked about, TrynaMakeIt talked about doubling down. That's not something that you want to do, because that takes you out your element. The whole thing about trading is keeping your anxiety levels down, keeping it so that you don't panic if a trade goes against you. You can reset, readjust, and then come back and try it again. Because once you start losing a certain amount of money, I mean, I don't care who you is, you're gonna try to figure out a way to at least stop the bleeding. And normally, when you try to stop the bleeding, you don't do nothing but make it worse. When at times we just need to be smarter and shut it down and try again tomorrow, or figure out what we went wrong, or just say, hey, some days like y'all see me text on Fridays. I just don't like Fridays, because I see a lot of chops. Some days it moves. Some days we just see a chop like we did this previous Friday. So at times we gotta have discipline. We got to be able to control some of our desires because the money's gonna be there, the market's gonna be there. Every day isn't a day for trading. Friday definitely wasn't a day to be trading. Even though you can make little quick scalps in and out, but nothing really presented itself. The metal flush I was looking for never presented itself. You just gotta realize where you are in the market, where your mindset is in the market. If you're having a hard time, getting wins under your belt, just start taking $10, $15 just to see dollar signs get added to your portfolio. It don't always have to be the $100, $300 banger. Sometimes it's just seeing $20 here and there. So there's different ways to tweak your mental, just to get you back in the right type of rhythm. If you're growing portfolios, definitely go to a stock that's the prices are you're capable of handling. Like I said, time is normally your best friend on options contracts. Time and out the money strike prices. Once you find the right mixture between those two, then you're good, because if you have conviction on a price target, you have the ability to wait longer than a week on it to come through. Zero DTEs, they're fun, but it pushes your anxiety levels up. Weeklies, if it don't hit, you checking your trades overnight, 24-hour market. You can't sleep at night because you're risking, or you're trading in a degenerate way, honestly. So when you have a month, 3 weeks, 2 months on let's say a Palantir or a hood contract that you might spend $200 on for a 2-month options contract, you feel me? Then you can sleep at night because you got an opportunity to make your money back, and you have 2 months for it to reach that strike price, versus 3 days for it to reach that price, and you're in the hole. You got a 120 strike on Nvidia and it's at 103. You got 2 days for it to hit that price target and go higher. So a lot of trade is mental, and like I said, you want to be able to keep your anxiety in check, and that keeps you level-headed. It keeps you grounded, and it allows you to make smarter trading decisions instead of constantly wondering if it's gonna go up, if it's gonna come back down, if you're gonna get some of your money back. You take care of your brain, take care of your mental, and it'll reflect in your trading habits too. But we can go on and on all night about market psychology, but like I said, we'll talk about it another day, a fresher day, and maybe I'll catch the beginning of it, and we can just kind of hold like another little master class on market psychology, and we can just go on and on. We can just have just a little session where we just talk straight market psychology and different indicators and trading styles one day. So that's all I got for you guys tonight. Seems like y'all really tapped in. I got most of it recorded, little bro, so that way we can repost it in the Discord, and the ones that wasn't able to make it, I didn't get it from the beginning, but the ones that wasn't able to see it, they can go back and see majority of it. Right now we sitting at 2 hours and 38 minutes, so I got most of it. Okay, he said his phone died. All right, well, that's all I got, Fish. Y'all got anything for the people? He probably gone. Okay.
Man, I would just re-tap in on what you were saying about trade with conviction, but believe in the trade, that you're making. Don't just, jump into a trade just because. Understand why you're getting into the trade. Understand where your exit is, whether it's up or down, and, if you are doing, options that you're going to swing, like Royalty is saying, make sure you give yourself time, especially in this market. Give yourself a couple months, because this market is absolutely crazy. It's going up and down, and just when you think that something's going to go your way, it can go the opposite way. That just happened to me a couple weeks ago. and a contract expired, worthless. It sucked, but it happens, you know. Um, but I have another one that I'm holding, a July expiration, and so that looks like that'll be in the money, and I'll be able to exercise it.
And
So
that's beautiful because, like
you
I said,
know,
you can sleep at night
trade.
on that.
Yeah, exactly. So this is a MicroStrategy 325 strike price, with a July 18th expiration, and I plan on exercising it. So, you know, yeah, like you said, I can sleep at night right now. You know, I'm close to the money, and I got it a while ago at a good price. So even with my premium and my strike, all I need is a 355 price target, and then I'm break even. So I figured by July I'll be there.
Okay,
You
let me
know.
let me answer Rock. He
But
said,
yeah,
"We're
conviction, man.
going months out make small gains. Will going months out make small gains when it does go your way because of time." Okay, so this how out the money contracts work along with longer expiration dates. So you want to go for an attainable strike price, and what that means something that it can reach by the time and go in the money. So you're looking at the delta, and when you go when you go longer expiration dates, the reason why they cost more is because you're paying for time and lower theta. So that way, when you do swing, instead of you swinging like a weekly call, where you're probably losing like $50 or $60 a day, a longer expiration dated call or contract, you might only be losing like $2 or $3 a day, but the delta is still $20 or $15 that you get every time it moves up or down a dollar. So that's why I was saying you have to learn Greeks on the contracts to understand whether it's worth taking or not. You want to stay typically above $10 delta, and if you want to go with theta, if you can afford it, you want to go with like a .01, a .02, something where you're losing like less than $1 a day for swinging, so that way you can actually see those profits roll in. So if you go with a super far out the money strike price, then yeah, I mean it's not gonna make money because the strike, your target's too far high. But if you're within like a reasonable price range, like Fish say he got a 325 call for MicroStrategy, I mean that's attainable,
Yeah.
and that can go in the money easily. So all that theta that might be decaying over time, it's gonna make it all back and more once that delta get the pump, and then it goes in the money. You're gonna get all of that back because then that contract's gonna go crazy. So
This contract's already up 54%.
yeah. So it's all about knowing the right strike prices to pick when you go 2-3 months out.
Now, royalty, isn't it true that if when you're doing leaps, buying contracts that are 2 and 3 months out, if you're swinging them, that you want to try to get rid of it within 30 to 45 days before expiration, because that's when theta starts to
Yeah,
accelerate.
yeah,
That's what I've heard.
yeah, and that's actually right. Normally I try to make sure I'm in a play where it plays out within 2 to 3 weeks, but unless you swinging into like a earning session where like right before earnings where you're gonna get that increase in the IV and stuff, then yeah, you want to get rid of it because that's when that theta starts kicking in and stuff like that. So that is right.
Yeah. Thank you. I appreciate you verifying that, man.
No problem. We in this together.
Hey,
But
that's what we're doing every day, man. That's what I said in the chat the other day, man. It's like the kingdom is like a really special place because a lot of these discords that are out there, it's just all right, pay me a membership fee. I'm going to tell you when to buy. I'm going to tell you when to sell. There's no transparency behind it, and you don't learn anything. The kingdom is a very special place because there's transparency behind every trade, and man, you like everyone here is just able to soak up the knowledge, and it's my true belief that everyone in here wants to soak up the knowledge.
Facts.
So then beyond that, then we have everyone helping each other too, man. It's such a beautiful thing. It really is.
The goal is for everybody to be able to signal a play if they want to. If everybody can signal a play,
Love it.
we'll never go hungry. So, but all right, I guess we can go ahead and wrap this up here. Um, and I have some stuff up tomorrow, but glad you guys had a nice little session, and we'll do it some more next weekend. Hopefully, I can check in. But like I said, Fish, I'm gonna be trading spy with y'all. Just sending alerts on spy with y'all next week, and then I'm actually gonna be on voice with y'all the following week after that. So we're gonna get to
Yo,
it.
man, I'm super excited for it, bro. I told you I'd like in the chat here. I put it on my I put it in my calendar, man. I'm super excited for it. Can't wait.
Facts.